Right. So in today's session, we will discuss about the important concept first, which is covering around 10 marks in your exam. And first question is coming from this area only, you know very well. Input tax, credit and all. Yes. So let's first understand what do you mean by input tax, and then we will go to what do you mean by input tax credit. So basically, input means nothing but what you purchase. The goods or maybe services you are obtaining from some other person. That is called as input. Now the tax what you pay on those purchases or those services what you received, that tax is called as input tax. Now what is this input tax credit then? Input tax credit is something where the buyer, when he purchases the goods and he pays the tax, and later on when he sells the goods to other party, from that sale value or from the output tax, whatever you can say, he will be eligible to set off the tax what he already paid on purchases. That tax is nothing but called input tax credit. Now why, sir, are you allowing input tax credit to be set off with output tax? The only reason is to avoid double taxation. That is the whole purpose of our GST also. So that is the reason why we should learn the topic relating to input tax credit, because input tax credit is not available to every registered taxpayer. There are some people who are not eligible to claim the input tax credit. For that, they have mentioned some conditions which are to be satisfied while availing input tax credit. Those conditions are given in section 16. Apart from that, section 17 talks about blocked credits and all, or apportionment of input tax credit based on the usage, based on the inputs and all the law is giving you. And then we also have one more section in this topic called section 18, where what will happen if you get converted from composition scheme to regular scheme to composition scheme, or the taxable supply becomes exempt supply, or exempt supply becomes taxable supply, or when you are supposed to get yourself registered. Earlier you were not registered, but now you are liable for registration. These all are there in section 18. So first we will see section 16, the conditions we'll try to understand. Then we will do one or two problems from section 16. Then we will go to section 17, understand what is there in section 17, then do some problems on section 17, then we will come back to section 18. This is what we are going to do for the next 1.5 hours. Okay, so because I don't want to rush up in input tax credit, because this is pakka question, and that too weightage is 10 marks. So let's not take any chance. Now, there are three types of taxes which we generally pay when we buy the goods. When we buy the goods from within the state, come on, what are the taxes you will pay? CGST and ASJ. When we purchase the goods from other state, we pay IGST. Now, this CGST or SGST or IGST is the input tax credit which is available to the buyer in GST regime. Now the question is how to adjust this credit against the output tax. Is there any particular manner laid down in adjusting those credit? Please understand, first the law says the respective credits must be used to pay respective taxes. Now what I mean to say, IGST credit should be first used to pay IGST output. CGST credit must be first used to pay CGST output. SGST credit must be first used to pay SGST output. That is what the law is saying. After that, if still there is a balance, that balance you utilize in any manner. Any manner means first you use the amount of IGST, balance IGST to pay CGST or SGST. No problem. Earlier the rule was different. First you should pay CGST, then only come to SGST. But now you have the flexibility to adjust the IGST payment either towards CGST or SGST. So one more important point which you have to understand here is CGST input cannot be used to pay SGST output. This is called cross utilization. Cross utilization means center taxes getting adjusted with state taxes. That is not allowed at all. Same way, SGST input can't be adjusted with CGST output. Why? Because only one reason, cross utilization is not possible. It is not permitted under the GST law. So let's see one by one based on what all we discussed. Then we will go to the conditions. One by one we will discuss all those conditions because every condition is important for us. Okay? Right. Now, having said that, first one, how to avail input credit. That is, what is the manner of set off of input credit is what he is telling you. Let's see the summary I have already told you. Here in detail we will discuss how to adjust the input credit with output tax. So if you see, first to pay IGST, first utilize the input credit from IGST and then you utilize from CGST and SGST. Similarly, to pay CGST, first utilize the credit of CGST, then if you have balance of IGST, then use it. There is no problem at all. Then comes your to pay SGST, take the credit of SGST and then the balance of what? IGST is what you have to keep in your mind. Now, for that reason, you have to understand something. This cross utilization between CGST and SGST is never ever possible, which I have already told you. Again, I am repeating because this mistake generally students will make while you are writing the exam. So don't make such kind of mistakes and come out. These are called silly mistakes, which should not happen even after learning so much and attending the revision classes also. Now, some definitions, important definitions I gave. Very simple definitions only. What do you mean by input tax? Obviously, the tax what you pay in relation to purchase of goods or services which is procured by the buyer. It can be either CGST, SGST, IGST, UTGST also. Then you have capital goods. What do you mean by capital goods? Obviously, the goods whose value is capitalized in the books of account. Nothing but the value should have been taken to the balance sheet. In our accounting language, I am telling you. So if it is taken to the balance sheet, then those goods are called as capital goods, like plant and machinery you are having. Definitely we will take it to the balance sheet. We won't bring it to the P&L account. So such goods are called as capital goods. Then what do you mean by input? Obviously the raw materials and all, whatever you purchase, something other than capital goods. So see there, any goods other than capital goods, but they say used or intended to be used. Where? In the course or furtherance of business. Now that is one very, very important issue. Now what they are trying to tell, listen carefully, I'll give you one example. What do you mean by used in the course or furtherance of business? CMS Academy is purchasing sugar for preparing tea for its staff and for any visitors who come to the campus for taking the admission. Is CMS using the sugar for personal purpose or in the course or furtherance of business? Come on. Obviously in the course or furtherance of business. Now, what we did is, while going home, we went to the nearby supermarket, Vijeta supermarket. We purchased 1 kg of sugar and we went home. Come on. Whether input credit will be available to us or not. Even though we are registered, it is not available. Why? Because those inputs are not used in the course or furtherance of business. So, usage of those inputs is mandatory in the course or furtherance of business. Then only you will be eligible to avail the input tax credit. Otherwise, input credit will not be available. Then comes your last one. What do you mean by input services? Obviously, something other than inputs or goods will be called as input services. Again, those services must be used or intended to be used where? In the course or furtherance of business. That is what I have given you here. Yes. So these are some small definitions what we have given. Now, before we go to section 16, that is the conditions to avail ITC. First tell me, who is the person who is eligible to avail ITC? Obviously a registered taxpayer. Only a registered taxpayer, that too who is not opting for dash composition scheme. Beautiful. That too who is not opting for composition scheme is eligible to avail the ITC. Yes, that is what is there in the next one. And before that, the ITC what he availed will go and sit in which ledger? Electronic credit ledger. You have three ledgers, no? Cash ledger, credit ledger and liability ledger. So any input you take, it will go and sit in one ledger called electronic credit ledger, not in electronic cash ledger. Whatever tax you pay, that will go and sit in the electronic cash ledger. Before you pay the tax, that amount will go and sit in the liability ledger. Clear about this? When we come to payment of taxes and all, it will become very simple for you. So person who is eligible to avail ITC, I have given, it is only the registered person who is eligible to avail ITC on supply of goods or services or both, again, which are intended or to be used or intended to be used in the course or furtherance of business. Now, ITC so availed shall be credited where? Obviously to the electronic credit ledger. Okay. Having seen this, tell me on what basis ITC will be available. What basis means what are the documents which are required to avail input tax credit and other conditions also you have to tell me now. Come on. What are the documents which are required to avail ITC? First, invoice. Sometimes if you don't have invoice, you will get a debit note or a credit note. Correct or not? Generally, credit note will reduce your ITC. So, I am not going to use credit note. I will use only the one word called debit note. Yesterday also we discussed in the class. Credit note will reduce. So, that is the reason why recipient need not reverse the credit whenever there is a post-sale discount. We discussed all these points. Then, another document. If these two are not applicable, what will be applicable? Like when you are importing the goods. No, what will you import? When you are importing the goods, you will have something called as bill of entry. Bill of entry. That bill also is an important document to avail input tax credit. Apart from this, there is one... No. Delivery challan and all ITC will not be there. Don't worry. Delivery challan is only a document to transport the goods from one place to another place only for some particular purpose, like weighment purpose. So delivery challan based on, because in delivery challan no GST will be mentioned. Please understand that. Then what is the other document? The document issued by input service distributor. Who is a input service distributor? Listen carefully. I'll take one example of a company called Hindustan Unilever Limited. Hope you have heard about this company. Now this company is having two divisions. Let's take an example, manufacturing division and a marketing division. Now this Hindustan Unilever Limited had given an advertisement in TV9, okay, to promote its product. Assume the bill raised for advertisement by TV9 News Network is 1 lakh. Plus 18% will be GST, which will come to 1,18,000. Now, what the company will do is, it will distribute the credit between manufacturing division and the marketing division. Why, sir? Why it should distribute? Because simple. If the manufacturing division does not manufacture, marketing division cannot sell. If marketing division does not promote the product, manufacturing division cannot manufacture. So both are interlinked to each other. That is the reason what they do is, the Hindustan Unilever Limited, it will distribute the the tax between both manufacturing division and the marketing division by raising one invoice or giving one document. That is called as a document issued by input service. So in this example of Hindustan Unilever Limited, Hindustan Unilever Limited is called as the dash input service distributor. Are you clear about this one? Then let's see. Tell me some more points before we go to the next slide. What are the other conditions to be fulfilled while availing input tax credit? Number one, goods must be received in the place of the recipient. Okay, if the goods are sold in installments, when ITC is available? Only when the last installment of goods have been received. Okay, next. Next, what is the condition? The supplier should have paid the money within 180 days. Correct or not? One question I have here. Listen. Supplier should have paid the money we are saying. Yes, which money? That money is nothing but the tax to the government. GST tax to the government. Okay. What about the recipient then? Recipient should first pay the money to the supplier within 180 days. Now be careful, don't get confused between supplier and the recipient. If the recipient does not pay the money within 180 days, come on, what will happen? The recipient has to reverse back the input tax credit in his GSTR 3B returns. Now, after 180 days, if he makes a payment once again, what will happen? Come on. He can re-avail the input tax credit after making the payment after 180 days. Okay. Next. If the goods are lost or destroyed by fire or damaged, will you be eligible to avail ITC? Answer is no. If the goods are given away as gift or free samples, again ITC will not be available because only logic is they are not used in the course or furtherance of business. Then to avail ITC, one more important condition is there. What is that condition? The supplier should file GSTR number 1. Then only the credit will appear to the recipient in GSTR 2A and 2B. Now there are two forms, you know very well. 2A is a dynamic form. It keeps on changing. Whereas 2B is a static form. Static means it is constant. Are you clear? That is the reason why, since it does not change, what the government says is, we will give you input tax credit only based on GSTR number 2B, not based on GSTR number 2A, because 2A is always fluctuating. When I say fluctuating, it is always changing. Okay. Then one more important point with regard to capital goods. ITC on capital goods will be available only if the goods are capitalized in the books of accounts. And second thing, they must be used in the course of furtherance of business. Right? Till here it's okay. What about depreciation on the capital goods? Definitely, in our accounts, we will pass depreciation on the total cost of the goods. Correct or not? Now, do not avail ITC on depreciation part of the capital goods. Am I right or not? No. Because if you avail, again it will lead to double expenditure, two benefits to the assessee. That is the reason why whenever you are going to audit and when you come across any invoice, okay, for purchase of capital goods, what you have to do? Immediately check their GST returns, whether they availed input or not. If they availed the input, they should not claim depreciation on the tax component of the capital good. Like cost of the capital good is 1 lakh, tax is 18%, 1 lakh 18,000. Now, when you are claiming depreciation, wait, if already 18,000 input was availed, depreciation should be claimed only on 1 lakh, not on 1 lakh 18,000. If you did not avail input on 18,000 rupees, then you can claim depreciation of on 1 lakh 18,000. But every client, they will avail input tax credit. But they will also make a mistake because the accountant does not know, and moreover depreciation being a non-cash item, it does not affect his cash flows. That is why every accountant also, what they generally will do is, they will take out depreciation on the total cost, which is nothing but the invoice price, which is wrong. Why? Because they already availed ITC, and depreciation they are calculating only at the end of the financial year. So as an auditor, we have to verify this only. That is why in our auditing, there is one statement. What is that? The responsibility of preparation of the financial statements is that of the management. Our responsibility is only to provide an opinion on the financial statements prepared by the management. So we as an auditor, we are not an accountant to pass journal entries and all. We are an auditor. We only have to verify the books of accounts. If they are not in line, tell them to make it in line with the standards whatever we require. Understood? Otherwise, expenditures and all will be disallowed as per the income tax law also. So you have to be very, very cautious. So let's see one by one all those points. Yes. One more point. This is my question. Can I avail ITC on an invoice after the end of the financial year also? Like for example, I purchased some goods. Okay. One invoice was missing. It went inside my table. I did not see. Financial year also over. I started cleaning the office because financial year also is over. In that process, I came across a bill on which I did not avail ITC. Financial year is over. Can I still avail ITC or not? If so, what is the last date by which I can avail ITC of the preceding financial year? Filing of ITR. Filing of annual return as per GSTR 9. That is 31st December will be the due date. Or 30th November, whichever is earlier. Sir, always 30th November only will be earlier, no sir. My dear, that is why they are not saying on or before the due date of filing, annual return. They say on or before filing the annual return or 30th November, whichever is earlier. Because annual return can be filed even on 31st October also, if all the books are ready. In that case, you can't avail input of the preceding financial year after the 31st of October, in my example. Are you clear? That is why many people, what they do is, they don't file the annual return till 30th November. Why? Because at least flexibility is there for you to avail the input credit. That is the reason why generally people will avail input only after, they'll file the annual return only after 30th of November in order to avail the input whatever was missing belonging to the preceding financial year. Now, my next question to you is, I lost one invoice, but I have Xerox copy of that invoice. Photocopy. Can I avail ITC based on the photocopy of the invoice what I have or not? Is the question. Can I avail the ITC based on the photocopy of the invoice which I have or not is the question. Always remember, photocopies and all are not allowed. ITC can be availed only based on original invoice, no photocopies. You might ask, why sir, what is the logical reason? Reason is simple. I purchased some goods, I have one invoice, original invoice, I took a Xerox. That Xerox is there with you people. Now if the law says based on Xerox also you avail, what will happen? The person who is having the original invoice is not able to avail the ITC. The person who actually did not purchase the goods, he will avail ITC, which is wrong availment of input tax credit. That is the reason why they told, no boss, if any invoice is missing, okay, you cannot avail the ITC on what, my dear, based on what, my dear, photocopy of the invoice. You should always possess the original invoice. Understood? So let's see one by one all conditions of section 16 I have discussed. Let's see one by one section 16, then we'll go to section 17. Before that, we'll do the problem and then go to section 17. Now, some conditions I have mentioned in section 16. First one, the recipient has received the goods or services or both. You should have received. That means physical goods should move. There are many people who do not actually move the physical goods. They just, for the sake of availing input tax credit, they issue an invoice. Now you might ask, sir, if they issue invoice for them, sales will increase. No, sir. Yes, boss. Such kind of people whose sales is less only will issue an invoice. You understood? So these are done by few fraudsters. Okay. That is the reason why the law has told the recipient should have received the goods or services or both. Second point. The goods or services obviously must be used in the course or furtherance of business. I have given you the example of sugar just 10 minutes back. Then ITC can be availed based on any of the following documents. What are they? Number one, an invoice issued by the supplier of goods or services or both. Nothing but called tax invoice. Second, a debit note issued by the supplier. Third, a bill of entry. That is whenever you are availing the importing the goods from other country, you will get something called bill of entry, because that is a proof that really the goods have come. And lastly, what is that? A document issued by whom? Input service distributor. any of the 4 documents are sufficient to avail the input tax credit. Then comes your next, the above said document must contain all particulars as per invoice rules. Now, what are the rules which are given in invoice? What all an invoice should contain? First, name of the seller or supplier, I can say. GSTIN of the supplier, address of the supplier. Similarly, name of the recipient, GSTIN of the recipient, address of the recipient. Then invoice number, date of invoice, then description of goods, HSN code. What is HSN code? Harmonized system of nomenclature. Then next, you also should have the what you call quantity of the goods, value of the goods, then GST amount charged, the total value, then signature by the authorized person. These all are mandatory as per the invoice rules. So please be careful with this point. Then now he is saying the invoice can contain additional information other than those prescribed, but not less information. What do you mean by that? Simple. In an invoice, you can mention your email ID, phone number. Similarly, write goods once sold cannot be taken back again. These all you have. Your what you call WhatsApp chat, Instagram, what you call page link, everything you give, no problem. But it should not have less information than what we discussed. Yes, so mandatory fields are mandatory. Then the supplier must have paid tax to the government. Obviously, then only the government will get that amount of tax. Okay. Next, the supplier must upload all the details in GST in portal. And then the recipient must have filed GSTR2. Actually, this is a redundant point. This is not having any relevance. Why? Because now the recipient cannot file GSTR2. GSTR2A and 2B are auto-populated. Yes, they are only for viewing purpose. You cannot amend, you cannot do anything. So they have kept this point because earlier when the law was introduced, they brought this point. The recipient should have filed GSTR number 2, but now everything is automatic because the GST department found a few flaws in this system. Their own portal only did not support filing of GSTR number 2. That is the reason they have actually removed this point in practice. Then, very important, if the goods are received in installments, then the credit is available on the receipt of last installment only. As we discussed, the intention is to ensure that the goods have been received in the premises of the recipient. Otherwise, it will amount to fake invoices, fictitious invoices, we can say. Okay, that is without actual movement of goods. You are just on paper, you are moving the goods. Okay, next. If recipient does not pay the amount within how many days? 180 days. The ITC what he took, he has to reverse it. Then, if he pays after 180 days, he can re-avail the credit. That is what is the next point. Please see. The said ITC can be availed again on payment of value of supplier to the supplier. Then no ITC shall be availed on, or if the registered person has availed depreciation on tax component of the capital goods. That's what I was telling you as an auditor, what we have to check. Next, a registered person cannot avail ITC after submitting the return for the month of September. I gave, actually it is November 30th. There we have to change. There is a printing mistake. For the I can say after submitting the return, instead of using submitting the return, I'll tell on or before 30th of November, or before filing the annual return, whichever is earlier. Similarly, no ITC can be availed by the registered person in pursuant of order of demand on account of fraud or collusion or willful misstatement or suppression. So if you are wantedly suppressing any value, or you are not honest, you are not genuine, then you will not be eligible to avail the ITC. Okay, so these are some conditions which are given in section 16. Based on this, shall we do 1 or 2 problems? Yes, I'll display the problem. Before that, I'll just change this one so that it will become easy for you. Yes. Now this is correct. I don't know, somehow printing typo mistake is there. Chalo. Let's see first question. Hope every one of you are having calculators and all with you. Let's see first question. From the following information, determine the amount of ITC available to ABC Limited of September 2025. For the month of September 2025. Let's see one by one. You can tell it directly also. Goods purchased without invoice. Will you be eligible to avail? No. Goods purchased from PQR Limited on which tax has not been deposited by the PQR Limited. Come on. Again, supplier did not pay the tax. One of the condition is not satisfied. Next. Purpose of goods not to be used for business purpose. So, purchase of goods not to be used for business purpose. Ultimately, you cannot avail ITC. Then, purchases from TT Limited, but the goods are received in the month of October 2025. Now, we are calculating for September, but the goods are received in October. Hence, you cannot avail the ITC right now. Lastly, goods purchased against a valid invoice from FF Limited in the month of September, but the payment is made by ABC Limited to FF Limited in the month of October 2025. Now, what will happen? Come on. Can you avail or not? Answer is yes. Why? Because you have a time limit to pay. Within 180 days you can pay. He is just paying in the next month itself. So ultimately you can avail the ITC. Now what is the total amount of ITC? Come on. Only 36,000 you can avail the ITC. Yes. Same way I have given one more practice question. Let's see. X Limited is registered manufacturer engaged in taxable supply of goods. Procured the following goods during the month of October 2025, which are capitalized in the books of accounts of X Limited. Determine the amount of input credit available. Now, electronic transformers used in the factory. Can you avail ITC or not? They are used in the factory only. They are used in the course or furtherance of business. That is what we told for capital goods. They should be capitalized in the books. That anyhow condition he gave in the question. Second, they must be used in the course or furtherance of business. That also we have discussed. Done. Next. Molds and dies used in the factory. Come on. Definitely yes. Next. Pollution control equipment used in the factory. Available or not? Yes. Yes. Capital goods on which depreciation has been taken on full value including ITC. Come on. You cannot avail. Last. Capital goods used as a parts on which tax is paid under composition scheme. Come on. Not available. So what is the amount of input tax credit available? First three you should add. First three you have to add and tell me the answer. 4,76,000. Yes. First three did you add? Did you understand how questions will come? These are very simple questions only. These kind of questions they will not ask you in the exam. If they ask, it is a bonus for you. That's all. That's what I can say. But they will ask you little, typical question only. How they will ask, we will see that also from the question paper, like how we did yesterday. Now, we are coming to section 17. We are talking about apportionment of credit and blocked credits. Let's see what do you mean by apportionment and blocked. Just now we told in section 16, goods must be used for what purposes? Business purposes. So they must be used in the course or furtherance of business is what we have already told. And now, what if part of the goods are used for business purpose, part of the goods are used for non-business purpose? Obviously, the percentage of the goods which are used for business purpose, on that only we can avail the ITC. That portion of the goods which are not used for business purpose, ITC will not be available. That is what I have given in the form of chart here. So if you see ITC based on usage in the business, goods or services used for business, yes, ITC will be available. Next I gave goods or services used for other purposes, obviously ITC will not be available. Same way, I told you yesterday 4 types of supplies. What are the 4 types of supplies? Taxable supply, zero rated supply, exempt supply, nil or non-GST supply. Correct? And now listen. Before we go to the next one, if there is a taxable or zero rated supply, that means I purchased some goods, using those goods I manufactured taxable or zero rated supply, can I avail ITC or not? My second question, using the raw material what I purchased, I manufactured exempted goods or non-taxable supplies, can I avail ITC or not? Now, which case I can avail ITC, which case I cannot avail ITC? Simple. If my output is taxable or maybe even zero rated because I am exporting the goods, I can avail ITC on the inputs whatever I purchased. If my output is exempted or non-taxable supply, then ultimately I will not be eligible, because output when it is not there, why to claim input? The purpose of giving you input is to reduce your output and remove the double taxation. When there is no when there is no output tax at all, where is the question of double taxation then? That is what is the next point. Please see. ITC based on usage of inputs. If the inputs are used for taxable and zero rated supplies, what will happen? ITC will be available. If the inputs are used for non-taxable, exempt or nil rated supplies, ITC will not be available. Why? Because my output is not taxable at all. When it is not taxable, I cannot avail input at all. I mean to say ITC at all. So when we are doing the problems, these kind of points will come. Please be careful with all these points. Then some blocked credits. Section 17 subsection 5 deals with blocked credits. Let us see one by one. Motor vehicle. Whenever you purchase a car, ITC will not be available, my dear, unless and until the car is used for transportation of goods or transportation of passengers or for imparting motor driving skill. That's why motor driving schools, whenever they purchase a car, ultimately they will be eligible to avail the ITC. Now, this is one area where many of our clients will question us, sir, I am buying a car. Can I claim ITC on that car, whatever I purchase? So, immediately don't say yes or no. What you have to do? First, ask him for what purpose you are buying. If he says for my personal purpose, sir, blindly reject. You cannot avail ITC. If he says, sir, I am purchasing it for my company, okay, but you should use them to transport the passengers. Are you clear? Employees. Then only you will be eligible to avail ITC. Otherwise, you will not be eligible to avail ITC. Understood? That's what. When you have in the cars and all, my dear, whenever you purchase it, you have something called white number plate and yellow number plate. Have you seen that? Whenever you book a cab, you will get yellow number plate. Nowadays, electric vehicles are also coming. In electric vehicle, generally it is green number plate, but when the electric vehicle also is purchased for commercial use, you are getting green plus yellow plated number plate. Are you clear? That is nothing but the plate, number plate will be in yellow, numbers will be in green. The vehicle number will be in green. That's how you can classify between what you call own purpose, I mean to say private purpose, or for commercial purpose. Blindly, if it is a commercial purpose, you can avail ITC. Why? Because the law is saying that only. Please see. Motor vehicles and conveyances except when used for. That means, first of all, you will not be eligible to avail ITC on motor vehicle and conveyances. But if you use them for transportation of passengers or transportation of goods, imparting motor driving skills or further supply of such goods in the vehicles or conveyances, yes, then only you will be eligible to avail ITC. Sir, what do you mean by further supply of such vehicles or conveyances? Further supply of such vehicles means nothing but I have purchased one vehicle, I want to once again sell the vehicle to someone else. I am not going to keep it with me. Like showroom owners are there. They purchase it from manufacturer. Manufacturer will levy GST and give. They can claim ITC. Now, when they are going to sell, they will also have GST. So, ultimately, ITC can be claimed by them. That is the meaning of further supply of such vehicles or conveyances. Or for, again, transportation of goods. So, any of these four, you use the motor vehicle or conveyance, you will be eligible to avail ITC. Otherwise, you will not be eligible. So, in short, what I told, if the vehicle is having a yellow taxi plate, yellow number plate, that we generally call it as a taxi plate. commercial purpose, then what will happen? ITC will be available. Otherwise, ITC will not be available. Understood? Now, don't ask me a foolish question. Sir, what if I purchase it by my personal only, but I'll take yellow taxi plate, sir? Now, please understand, when you take yellow taxi plate, taxes are more for the vehicle. Some more conditions are there. The showroom owner will not directly give you the vehicle. So, that is the reason why. Once you have yellow taxi plate, blindly you avail ITC. Otherwise, don't avail ITC. And don't write this kind of points in the exam. If I have yellow taxi plate, ITC is available. Sorry, that is only for your understanding purpose I am telling you. Yes? Then comes your next. Food and beverages. Very important. Outdoor catering. Similarly, for girls, beauty treatment. Javed Habib Beauty Parlor. ITC is not available. Similarly, health services. Cosmetic and plastic surgery. ITC will not be available. Unless and until, listen carefully, unless and until the input service or of these are used for providing an output taxable supply. Now, sir, what do you mean by this? Listen, very simple. There is a film actress, Rashmika Mandana is there. She is going to Javed Habib Beauty Parlor to get her facial done because she has to appear beautiful in front of the screen. Which screen? The camera. Yes, she has to. Silver screen. Yes, what you told is right. So, she has to appear beautiful. For that she is taking. That means what? The services what she took is used to provide a output supply. So, when she acts in the movie, she will charge remuneration which is liable to GST. So, her output is liable to tax. Hence, her input also will be eligible. I mean to say, the input services will be eligible for ITC. That is the meaning of this point. See here. The inward, listen. The inward supply of these is used for making an outward taxable supply. Not only outward supply. They are using the word outward taxable supply of same category or as a component of composite or mixed supply. Then, membership of a club or health and fitness center. So, if any of you are going for Cult Fit gym, they will charge GST. That will not be liable to, that will not be eligible for, I mean to say, ITC at all. Similarly, rent a cab, life insurance and health insurance. Yesterday also we have discussed, except when the government has made it obligatory. That means the government told, hey, every one of you, Mr. Employer, you have to take insurance in the name of your employees. It is mandatory as per law. Then the employer, whenever he pays GST for staff, yesterday we told, grouped insurance schemes, GST exemption is not available. Only for single party only exemption is available. Do you remember? So when the employer takes, employer can avail the ITC, provided it has to be made mandatory by the government. Otherwise, he will not be eligible to avail. Similarly, works contract services for construction of immovable property will not be eligible. So, in case we are constructing a house, are you clear? Whatever works contract, what do you mean by works contract? It is a contract for supply of material and labor. That's called as works contract. So, for that works contract services, you will not be eligible to avail ITC except, very important, except it is an input for supply of works contract, and second, immovable property is a plant and machinery. Now, what do you mean by when it is input service for supply of works contract? Listen, I am a government contractor. What I did is I got an order from the state government to lay the roads, cement roads. For this purpose, what I did is I purchased the cement. I purchased some steel from the traders. They charged me GST. Now, since I am using my inputs for providing further outward supply, I will be eligible to avail the ITC on those cement, steel and all. Otherwise, I am giving you one more example. I am constructing a house. I purchased cement, steel, everything. They gave me bill with the GST. Now, I will not be eligible to avail ITC because house is not being used for in the course or furtherance of business. Understood about this? Then, some more points. After this, we'll do one problem again to avoid that sleepy mood. Inward supply is received by a taxable person for construction of, again, immovable property other than plant and machinery on his own account. That is what we saw just now also. Next, inward supplies on which tax is paid under composition scheme. We already did one problem just now. It is not available. Next, inward supplies received by a non-resident taxable person except when goods are imported by him. Then goods used for obviously personal consumption. Just now we told it should be in the course or furtherance of business. Similarly, goods that are lost or destroyed or stolen or damaged or written off or disposed of by way of gift or free samples also. Since there is no consideration, ITC will not be available. Lastly, the tax paid as a result of tax evasion or upon detention of goods or conveyances in transit or towards redemption of confiscated goods or conveyances. What do you mean by this? My vehicle is carrying 100 bags of rice. Okay, why rice? Again you will get it out. Assume 100 bags of plastic items it is carrying, which are liable to GST. Now, I did not avail, I did not pay GST at all. I did not raise a bill. I just sent the goods. That means my clear intention is to escape the payment of tax. Now my vehicle is caught. It has been intercepted. We use the word intercepted. Intercepted means it can be stopped. And if it is caught, then if I agree to pay the tax on that, I will not be eligible to avail ITC. Why sir you are paying now? Correct. I am paying when? Only when I am caught. That means I am not honest at the first instance. When I am not genuine or honest, I will not be eligible to avail the ITC at all. Understood? So these are some conditions which are laid down in section 17 with regard to blocked credits. Let's see some practice questions. Practice question number 3. Determine the amount of input available to P Limited for January 2026. Chalo, you have to tell me one by one. Input used for manufacture of final product. Can I avail ITC or not? Answer is yes, assuming that final product is taxable only. Okay. Food and beverages procured from sweet caterers for being used in a function. Function is not in the course of furtherance of business. Function is only personal purpose. Hence, I will not be eligible to avail ITC. Goods used for providing services during the warranty period. Come on. Warranty period means ultimately there will be or it will be in the course or furtherance of business. Hence, it is available. ITC is available. Then, goods used for setting up telecommunication towers being immovable property. Come on. Are they available or not? They will be available because telecommunication towers are plant and machinery. That's why it will be available. Just now we have seen no except plant and machinery. Last, input stolen from the factory. It is not available. So what will be the answer here? 72,000 plus 12,000, 82,000 plus 90,000, which will become 1,72,000. Everyone clear? Yes? Next, let's see practice question number 4. Determine the amount of input available to R Limited for January 2026. Come on, go through each and every point. This is to be like an exam for you. Come on, go through each and every point and tell me how much is the answer. Chalo, tell me the answer now. So goods used in constructing additional floor available or not? Available or not? Why it is not available? So floor is becoming immovable property. That's why you will not allow. Tell me, think and tell. That's why I gave you time to think. So since it is becoming capital asset, moreover, he did not tell for office premises. So that is the reason we will assume that it is for personal purpose and hence ITC will not be available. Right. Next, packing material used in the factory. Come on, ITC will be available. Goods destroyed due to natural disasters. ITC will not be available. Goods used for repairing office building and such cost of repairs is debited to the P&L account. ITC is available here. That is why I have given you time. Please understand the amount has been debited to P&L account. That logic of immovable property is only for capital goods. Here the repairs has been debited to P&L account. So you need not worry about the usage and all. Okay. Then paper for photocopying machine in the office. Come on. In office, I purchased a Xerox paper, like CMS has purchased some papers to print materials and all. It is used in the course or furtherance of business. ITC will be definitely available. So the out of all, except for the first one and the third one, you will be eligible to avail. So totally 18,950 rupees will be your answer. Then practice question number 5. Come on, I want you to read this and tell me the answer once again. Chalo, tell me the answer then. Goods used for captive consumption in a factory. Come on. Yes, ITC is available. Goods purchased for repairing factory shed and capitalized in the books. Available or not? Sure? Factory shed is immovable. Huh? Later on it can be dismantled, no? Let it be capitalized in the books. See, just because it is capitalized, that doesn't mean ITC is not available. Even if it is capitalized also, you can claim the ITC. For capitalized, only one thing, immovable property should not be there. It can be a plant and machinery. So you can avail the ITCs. But see the third one. Cement used for foundation and structural support to plant and machinery. Come on, can you avail or not? Answer is yes, you can avail. Just like how we have lift in the building. For constructing that lift, to avoid it from wobble-free movement, they fix it in one place. Okay, that doesn't mean it is an immovable property. So you will be eligible to avail the ITC. Next, inputs used in trial run. Come on. Why? You will be eligible to avail. Trial run is in the course or furtherance of business, not metro trial run and all. Trial run is to see whether the goods are properly working or not. That's correct only. Last, food and beverages purchased for employees during office hours. Just now we told. Food and beverages, will it be available? Only if it is required by the law, or if it is, the inputs are used for providing further output supply only. So here that is not there. Hence it will not be available. So what all will be available? First 4 ITC will be available. Only the last one you cannot avail the ITC. Then comes one more question for your practice. 6th question. Come on. Last question for your practice. Look into that and tell me one by one. It's quite a simple question. Yes. Tell me the answer. Accounting and auditing services. Come on. No answer. Come on. ITC is available. That is in the course or furtherance of business only. Second, health insurance services not made obligatory by the government. Just now we discussed. Only if it is made mandatory, only ITC will be available. Otherwise, no. Next, routine maintenance of cars manufactured by A Limited. Yes, in the course of furtherance of business, it is allowed. Goods used for repairing office building and cost of such repairs is being debited to P&L account. Come on. Definitely, it will be allowed. Lastly, hotel accommodation to employees on vacation. Even though it is given for employees, but it was not done in the course or furtherance of business. It was given for the purpose of vacation. Hence, ITC will not be available. So, here the answer would be 39,600. Very good. Super. So, with this, I think you have got some confidence over section 16 and 17 conditions. Okay. Anyhow, we will do one question from the January 2026 exam. But before that, let me complete section 18 also. Then we will go to the question paper. Now, section 18 is purely talking about ITC on opening stock. Complete. Section 18 is having 4 clauses. 18 subsection 1 clause A, clause B, clause C and clause D. 4 clauses are there in section 18. Let's see one by one. First, 18 subsection 1 clause A deals with compulsory registration. That is, I'll give you one example. Listen. Till yesterday, I was not liable to be registered at all, because I was only supplying the goods within the state and my turnover also was within 20 lakhs only. Hence, I was not liable for registration till yesterday. But today, I am going to make a interstate sale. Interstate means definitely registration is compulsory. If you remember section 22 and 24 will tell you that only. So registration is compulsory if I make a interstate sale. Hence, from today I am liable to pay the tax. Now, since I don't know, I do not have any idea that I'll make a sale today outside the state. Since I made, what I did is I applied for registration because they will give me 30 days time to apply for registration. I applied for registration, and let's understand, let's assume after 2 days, that is day after tomorrow, the registration was granted. So please understand, yesterday was which date? 13th. I am liable from which date? Today, 14th. Registration was granted to me on which date I told? 16th. Day after tomorrow I told. Yes, I applied today. Immediately, day after tomorrow, the registration was granted. Now, listen. Till yesterday I was not eligible to avail ITC at all. Why? Because I was not registered. Hence, I was not eligible to avail ITC. But now listen carefully. From today onwards, I am liable to be registered. Hence, since I am liable to be registered today, even though my registration is granted later, but still I am liable to pay tax from today. Are you clear? Any stock which is lying, stock means it can be inputs contained in semi-finished goods or inputs contained in finished goods. These three only, not on capital goods. Please understand. Inputs contained in semi-finished goods, input contained in finished goods. On all these stock which is lying till yesterday, I already paid tax, but I did not avail ITC because till yesterday I was not eligible for availing ITC because I was not registered till yesterday. Then I have registered today. I got registration after 2 days, no doubt, but today is the day from when I am liable to pay the tax. Hence, whatever ITC is lying on the stock I purchased till yesterday will be called as opening stock for me. Now, on that stock, whatever tax I paid, I will be eligible to claim ITC today. Are you clear? So, that's why it says, the law says, the ITC on opening stock on the day immediately preceding the day when he was liable to pay the tax. Now, don't ask me a foolish question. Sir, what about the purchase, what I do from today? Are from today, what you do? Anyhow, by default, you are eligible to avail. No. The whole idea is only till yesterday. What is the position? Will you be eligible to avail the ITC today or not? Answer is comfortably yes. That is what is mentioned in section 18, subsection 1, clause A. Now, before we go to clause B, I'll explain briefly what is there in clause B. Clause A was talking about mandatory registration. But clause B is talking about voluntary registration. Voluntary means even though I am not liable to be registered, I am applying it voluntarily. Now, just because I applied, the government will not give me registration directly. They will verify why this person is applying for registration. They will verify all the facts. Then only they will give me registration. Now, listen. Assume I applied for registration today. Okay. But I was given registration, assume on 30th of April. Sir, so long will it take? Yes, government is having 15 days to give their approval for registration. Assume my registration got approved on 30th. Assume 15 days time limit. Okay. Even though it is more than that, I am just taking for our easiness. Okay. Now, what law says is, whatever purchases I made till 29th, I will not be eligible to avail ITC. But from 30th, I am given the registration. Hence, since I am given the registration by the department on 30th, whatever ITC was there on the stock, which is called as opening stock, I will be eligible to avail from 30th of April. So, what all purchases I made till 29th April, on that purchases, whatever tax I paid, that input I will be eligible to avail on 30th. That is the date when the registration was granted to me. Why? Because it was a voluntary registration, not a mandatory registration. So, you have to observe two important words what I told in these two sections. 18 subsection 1 clause A tells you the day when I become liable to pay the tax, because it is a mandatory registration. But 18 subsection 1 clause B says the day of grant of registration. Why? Because it is a voluntary, not a mandatory registration. These are the two things which will change your entire answer if you do not focus on that point or problem properly. So let's see one by one. ITC on opening stock at the time of registration, 18 subsection 1 clause A. Now see the wordings what I gave. A person who has applied for registration within 30 days from the date on which he becomes liable for registration and has been granted the registration shall be entitled to take input tax credit on of input tax in respect of what all? 3 points I gave. Inputs held in stock, input contained in semi-finished goods, input contained in finished goods. So you have to observe capital goods are not covered. In clause A and clause B, capital goods are not covered. Capital goods are covered in clause C and clause D only. Please be careful. When we come to clause C and clause D, the difference you will observe. Now, when he can avail, see there. On the day immediately preceding the date from which he becomes liable to pay the tax. So what is he saying? The inputs on all, input tax on that inputs or semi-finished goods or finished goods on the day immediately preceding the date when I become liable for registration till that day whatever ITC I have which I did not take, please take it now. That is what the law is saying. Because from today anyhow by default you can claim. Till yesterday only. The whole idea is about opening stock. Please observe the heading also. ITC on opening stock only I am saying. Okay. Then see the next one. ITC on again opening stock at the time of voluntary registration. Again, now what is this voluntary? I told you just now 18 subsection 1 clause B. I am not liable to be registered but voluntarily I applied for registration. So see there. A person who has applied for registration under section 25 subsection 3, that is voluntarily, shall be entitled to take credit of input tax in respect of, again what all? Inputs held in stock, input contained in semi-finished goods, inputs contained in finished goods. When? On the day immediately preceding the date of grant of registration. I have mentioned very clearly that word, please check. Yes. Then let's see one practice question on these two topics. You will understand. Practice question number 7. PQR Private Limited is engaged in supplying taxable goods to its customers within the state and it is not liable for registration. That is the example I took also. Now see there, from 15th February 2026, it started interstate supply and hence it applied for registration on 25th February. Why? Because 30 days time is there, no? So it took 10 days and it applied on 25th February. And the same was granted to them. That also was granted. Now the CGST, SGST, IGST liability for the month of February is 19,500, 19,500 and 40,500 respectively. This is the output liability, ma. Okay? And has to make e-payment of tax on 20th of March. The following details are provided by PQR Private Limited. Calculate the tax payable by PQR Limited. Now you have to do this problem. How you have to do? I told you in the beginning of input tax credit. I told you first IGST input should be used to pay IGST output. Do you remember? You manner of utilization of input. Based on that, this problem is there. So please put it in your notes. Computation of, come on. Computation of GST payable. Computation of GST payable. Computation of GST payable. Particulars CGST, SGST, IGST. Particulars CGST, SGST and IGST. Particulars CGST, SGST and IGST. Over. And now, first, output liability. What are the output liabilities? He told already in the question, it's very clear. 19,500 CGST, 19,500 SGST and IGST is 40,500. 19,500 CGST, 19,500 SGST and 4,500 IGST over. Now less input tax credit. Less input tax credit. Now let's read the question. Listen. Inputs were received on 10th January 2026, lying in stock. Now, one important point I want to discuss here. Sir, you told ITC is available on opening stock. Very good, sir. That means the goods what all I purchased till yesterday, I can claim. What is the time period? That is last how many years I can claim? Like that. Only 1 year you can claim. That means what I am saying is any goods which are purchased only up to 1 year from yesterday. So assume yesterday was what? 13th April 2026. So any goods purchased from 13th April 2025 to 2026. That year, 1 year input only you can claim. Not complete any time you purchase you can claim and all. That is not possible. Limitation is 1 year, my dear. Very, very important. That is why they are giving you the dates here in the problem. I wanted to explain this point only when I show the problem. So please be careful. Inputs received on 10th January 2026. No problem. Which date they were eligible for liable for registration, ma? 15th February. If you see 15th February, they are making interstate supply. No doubt they applied for registration on 25th, but they are liable for registration on 15th February itself. Now you might ask me a question, sir, if they are liable for 15th February, but they made application only on 25th, sir, how will they get registration from 15th, sir? Now in GST portal, when you are applying, they are asking you one question. From which date are you liable? Are you clear? There you should mention we are liable from 15th February, not from 25th. You are making application on 25th, but you should tell them we are liable from 15th. Then they will give you the certificate also from 15th. Are you clear? Even though future date they are giving, but they will go back and give you the certificate because your liability has arisen from 15th itself. Are you clear about this? Now, any purchase which you made here, since it is 15th February 2026, any purchase you made from 15th February 2025 to 26, this 1 year purchase only you can claim the input. Now see, when it has been purchased, inputs were purchased on 10th January 2026. Is it within 1 year only or not? Definitely yes. Hence you will be eligible to avail the ITC. Then second, inputs inputs received on 25th October 2025, lying in semi-finished goods. No problem. 25th October 2025 is well within the limit only. You can purchase up to which date, ma? 15 February 2025. Till that day time is there. Okay. Next, inputs received on 15 January 2026. No doubt. Contained in finished goods. You will be eligible to avail. So how to take? Wait. Now how to take here? Inputs are actually CGST and SGST only. But output liability you have CGST, SGST. What did I tell in the beginning of the input tax credit? First, CGST input must be used to pay CGST output. Then SGST must be used to pay SGST. Then the balance of CGST and SGST you can use to pay IGST. Clear? Now, did you write less input tax credit? Yes. First, below that write down CGST. CGST. Now, how much is the total CGST? Total 20,700, amma? Yes. But actual output of CGST liability is how much? 19,500. So restrict the CGST to 19,500 now. Restrict it to 19,500. So some more input balance CGST input is there. 2,700 minus that 19,500. How much that 800 rupees? 1,200 rupees. Yes. Keep it aside. Then SGST. SGST input. Come on. Same Same values only will be there. You need not worry. CGST and SGST same value. Again, you have to restrict it to 19,500. Rest all columns dash dash ma. Yes. Now, balance of CGST. Next write. Balance of CGST you write. How much balance we had ma? 1200. That where you should adjust IGST column. Go and put the amount in IGST column. Similarly, balance of SGST. Balance of SGST. Where you have to adjust that balance. Come on. Again in IGST column. Over. Did you adjust all the input? Now tell what is the GST payable. 38,100 because 4,500 minus 1,200 minus 1,200 you will get. Yes, GST payable. Did you understand? Right? Did you understand how to present the answer? Particular CGST, SGST, IGST. Simple. It will be easily visible to the examiner that you know the subject. Right? Then let's practice one more question. B Limited is not required to get himself registered but wishes to obtain voluntary registration. He is only telling. So when voluntary registration, our 18 subsection 1 clause B provision will come into picture. Under GST and applied for registration on 18th September 2025. He applied, that's all. Sorry, they applied, company, no? And has been granted registration on 25th September 2025. So they got the registration only on 25th. So any inputs which are lying up to 24th September, you can avail. 24th September 2025. From there, 1 year back. So 24th September 2024. Be careful, okay? The CGST and SGST liability for the month of September is 21,000 each. Now, it provides the following details. Calculate the tax to be paid. Wait. Input procured on 2nd September 2025. First, eligible or not? Definitely yes, because it is within that 1 year time period. Next, inputs received on 21st February 2025 contained in semi-finished goods. Eligible or not? Eligible. Next, input contained in finished goods procured on 19/9/2024 lying in stock. What was the maximum day I told up to which you can claim? 24th September 2024. But here it is which date? 19th September, which you cannot avail at all. Did you understand? Similarly, inputs worth rupees 50,000 procured on 13th September 2025 lying in stock. Available or not? Definitely yes. Lastly, capital goods procured on 12/9/2025. Don't just go by the date. For 18 clause subsection 1 clause A and B, capital goods is not allowed. I have already mentioned this point. So please be careful while doing the problem. Come on, put the heading. Computation of GST payable by B Limited. Computation of GST payable by B Limited. Particular CGST, SGST. That's all. Because output IGST is not there, ma. So particular CGST and SGST. Particular CGST, SGST. Over. Everybody. Particulars CGST, SGST. Chalo, output tax liability. Output tax liability. How much output tax he told? 21,000 each. Fill up 21,000, 21,000. Less input tax. Now what all input taxes are there? First one available 4,500. Yes, you can put it in calculator. Plus 7,500 is available. No. Then next one is not available anyhow. That next one is only IGST. That will come back. Capital goods is not available. Now, how much is the total of CGST input you got? 12,000. Correct? How much is the output of CGST? 21. So 21 minus 12. Put 12,000 there in CGST. Wait. Then SGST, right? Again, same value you please write 12,000. Now, How much is the balance in CGST and SGST? 9,000 and 9,000. Now, we have somewhere IGST credit ma. If you see this one, you have see the second point, inputs worth rupees 50,000 procured on 13 September 2025, lying in stock, IGST at the rate of 18%, which comes to 9,000 rupees. So directly first IGST credit you have to adjust against CGST. Or maybe even against SGST. Anyhow, since we have both same only, CGST we will put 9,000. So write IGST. Write IGST 9,000. Now GST payable. So CGST nil, SGST 9,000 rupees. CGST nil, SGST you will get 9,000 rupees. Every one of you clear? Any confusion in these two problems? Hope the concept is very clear for every one of you. Chalo, then ITC on opting out of composition scheme. Yesterday only we were discussing about composition. When you come from composition scheme to regular scheme, can you avail the ITC or not? Definitely yes, you can avail the ITC. Again, till yesterday I was in composition, same logic. Till yesterday I was in composition scheme. Today I am converting myself to regular scheme. Till yesterday what all purchases I made, ITC I am not eligible to claim. Now since I am converting into regular scheme, on all those stocks which are lying till yesterday, today I will be eligible to claim the input. But one change here is, when you are shifting from composition to regular scheme, ultimately you will be eligible to avail ITC even on capital goods. Not only on inputs, but also on capital goods. Understood? So let's see one by one. Where a registered person ceases to pay tax on composition scheme. Ceases to pay tax means nothing but he is going to pay tax on regular scheme. That's the meaning. He shall be entitled to take input credit in respect of what all? Number one, inputs held in stock. Second, inputs contained in semi-finished goods. Third, inputs contained in finished goods. And last one, capital goods, which was not there in clause A and clause B. Please be careful with this. When he can avail? On the day immediately preceding the date from which he becomes liable to pay tax under section 9. Yesterday, levy and collection section 9 I told intrastate. Yes? Then note, the credit of capital goods shall be reduced by percentage points as may be prescribed. What do you mean by this? Percentage points. Just like depreciation. When you start using the capital goods, what will happen? They'll get depreciated. When they get depreciated, the credit also should get reduced. Correct or not? Now, how will you calculate? He's telling you percentage points. What are the percentage points? For that, they are saying reduce 5% per every quarter or part thereof. That means from the date of issue of invoice of the capital goods, every quarter reduce 5% of the input. Balance input only you can claim. So say for example, I purchased the capital goods say 7 months back or 6 months back. Now on the capital good, assume GST is 10,000 rupees. Let's take an example. Now when I am availing ITC, now because I converted from composition scheme to regular scheme, what I should do is 10,000 minus 5% for first quarter, 5% for second quarter. Khatam, because 6 months I told. 3 months, no, quarter. So what will happen? 5% and 5%, nothing but 10% I have to reduce. So straight away I can avail only 9,000 in my example. Understood? Then ITC on clause D ma. ITC on conversion of exempt supply into taxable supply. We have seen no in section 17 just now. Apportionment of credit I was telling you. If the goods are used for taxable or zero rated supplies, yes, it is available. ITC is available. If they are used for non-taxable supply or exempt supply or nil rated supply, it is not available. Now, government gave a notification saying that from today onwards, this supply is not exempt. It is going to be charged at 5%. So now the exempt supply has become taxable supply. Now that means till yesterday, since the supply was exempt supplies, what all purchases I made, I can't avail ITC. But from today, The government has issued a notification saying that these supplies are liable to GST. So from today, whatever purchase I make, I can claim. But what about the purchase I already made? They are nothing but our opening stock. On that also, I can claim the ITC. This clause D also includes your capital goods. Again, while claiming ITC on capital goods, we have to reduce the ITC by percentage points, which is nothing but 5% per every quarter or part thereof. Understood? So see here, where an exempt supply of goods or services or both by a registered person becomes taxable supply, such person shall be entitled to input credit on what all? Inputs held in stock, inputs contained in semi-finished goods, inputs contained in finished goods, and on capital goods exclusively used for exempt supply. When? On the day immediately preceding the date when the supply becomes chargeable to tax. Understood? For that, some points we have to be careful. Some conditions he has given. Please see. Credit on capital goods to be claimed only after reducing how much? 5% per quarter or part thereof from the date of raising the invoice, because the capital goods will start depreciating from the date when I purchase. That's why from the date of invoice itself, 5% per quarter or part thereof I have to reduce. This first condition. Second condition is the registered person shall file a declaration in form number GST ITC 01 within 30 days from the date of becoming eligible to avail ITC. And lastly, the above time limit may be obviously extended. So the 30 days can be extended by the commissioner by mentioning the reason in writing. These are some conditions you have to be very, very cautious about. Okay. Then we'll do one problem on this, but before that, reversal of credit on opting out of regular scheme. Now, till now we came from composition to regular in 18 subsection 1 clause C. Now 18 subsection 4. Suddenly, I opted to composition scheme. Now, like for example, last year completely I was in regular scheme. Was I eligible to avail ITC? Definitely yes. I availed ITC also. That ITC will lie in which ledger? Electronic credit ledger. Now, there is a balance lying in electronic credit ledger, but on 31st of March 2026, I applied for composition scheme. Now, from 1st April, I am not eligible to avail ITC because I am in composition scheme. But what about the ITC which is already lying in my credit ledger? That has to be reversed. Now, while reversing, if you have ITC on capital goods, again same, reduce 5% per every quarter or part thereof and reverse the balance amount. Understood? So, see there, where any registered person who has availed ITC opts to pay tax under composition scheme, or the goods or services are both supplied by him, what will happen? Becomes exempt. Now, he shall do? Pay an amount equal to ITC by way of debit in the, that's why I told you reverse in the electronic credit ledger. Reverse means nothing but debit it. Now, on what all? In respect of what all? Again, inputs held in stock, inputs contained in semi-finished goods, inputs contained in finished goods, and capital goods on which day? On the day immediately preceding the date of exercise of option. I already told. Till 31st March, you are not eligible to avail. From 1st April, you are eligible to avail. That is, you are going to composition scheme. Till 31st March, whatever input was there, please reverse it off as on 1st April and then only go to composition scheme. Understood? Then, some more points in 18 subsection 4, please see. The input tax credits shall be determined in the following manner. What manner? See there. In case of inputs, ITC shall be calculated proportionately on the basis of invoice. Obviously, whatever invoices are lastly purchased, that only you can now reverse it, because those which you purchased, you would have already used them. So that credit will not be still lying in the ledger. Correct? Like for example, last year, 10 invoices I purchased. One in April, one in May, one in June, one in July, like that. Now, the balance, some only part of that balance is lying. That part of the balance will reflect which invoice? The invoice which have been obtained earlier. I mean to say, you have that FIFO method, LIFO method. Based on that, you have to check. Next, in case of capital goods, what will happen? ITC involved or in the remaining useful life. Very important. For capital goods, what is the useful life? Capital good, what is the useful life? The useful life is 5 years. But we should not say 5 years, we have to say 60 months. Why, sir? The logic is very simple. You will be filing GST return on a monthly basis. That is why useful life you have to take as 60 months. Okay, so now what is he saying? Please see. In case of capital goods, ITC involved in remaining useful life. Remaining useful life, not complete. So that means I purchased a capital good 6 months back. What is the remaining useful life of the capital good today? 6 months back I purchased a capital good. Come on, what is the remaining useful life? Today, how many months over? 6 months over. What is the remaining? Come on, 54 is the useful life. Are you clear? So for that he gave you one formula. ITC is equal to input credit, that is ITC to be reversed, is equal to the actual ITC into remaining useful life, that is 54 divided by 60 in the example what I told. Okay. Then some capital goods might be sold as a plant and waste and scrap. Do you remember in your accounts and all, profit on sale of old plant and machinery we get, or loss on sale of old plant and machinery? Let's see what will happen there. 18 subsection 6. In case of supply of capital goods or plant and machinery after use, the registered person shall pay what? An amount equal to ITC taken on said capital goods or plant and machinery after reducing, again same, 5% for every quarter or part thereof. Why? Because capital goods, no, they'll get depreciated. That's why you have to reduce the ITC rate. Or the tax on transaction value of such capital goods, whichever is higher. What do you mean by this? Listen, I purchased a plant and machinery, okay, worth rupees 5 lakhs. Okay, assume 1 year back I purchased. Now, I am selling that plant and machinery today for 2 lakhs, assume. Now, since 1 year back I purchased, how much input I have to reverse? How much input? Come on. He told no, 5% reduce for every quarter. 1 year back means 4 quarters will come. 4 quarters means 20%. 4 into 5%, no. So from 5 lakhs reduce 20%. 1 lakh will go. So how much is the balance? 4 lakhs. No. Yes or no? Now, what is the credit on that? 5 lakhs is a cost. Assume it is 18%. Now calculate 5 lakhs into 18%. 90,000. 90,000 minus how much percent you have to reduce? 20%. It will become how much? 18,000 rupees. Correct? So 90,000 minus 18,000. That means 72,000 rupees. But for how much did I sell the capital asset I told? 2 lakhs. 2 lakhs into 18% is how much? 36,000. Now, whichever is higher, you have to reverse. 72,000 is higher, that we have to reverse. That is what he is saying here. Again, I am repeating, see the paragraph properly. An amount equal to ITC taken on said capital goods by reducing 5% per quarter or part thereof, or tax on transaction value of those capital goods, whichever is higher, you have to reverse. So let's see one question on that, you will understand. Okay, practice question number 9 I have brought. XYZ, a dealer of goods, is engaged in supplying exempted goods, very good, to its customers. On 17th June 2025, the exemption notification was rescinded. Rescinded means from that day it has become taxable and the goods were liable to tax. Determine the eligible credit for the month of June 2025. He gave particulars CGST, SGST and IGST. You also have to put the same format. First you put computation of eligible input tax credit. Computation of eligible input tax credit. Computation of eligible input tax credit. Over. Now write first inputs lying in stock. Can I avail or not? Yes, directly in IGST column you have to put 12,000. IGST column put 12,000 over. See the second point, what is he saying, ma? Inputs rupees 1,35,000 contained in semi-finished goods lying in stock, but only inputs worth rupees 85,000 were procured after 16th June 2024. Why is he telling 16th June 2024? Because when did the supply become taxable? Please see the date. 17th June 2025. What I told. Last how many years you can take, I told. Only 1 year. So that's why he is saying, out of 1,35,000 input, only 85,000 worth input were purchased after 16 June. So you can claim ITC only on the inputs of rupees 85,000? No. On 85,000 you can claim. No. So how to claim? Now 8,100 into 85 divided by 1,35,000. Come on. Put it in the bracket, ma. You write inputs contained in semi-finished goods. Please write. Inputs contained in semi-finished goods. Please write that. Inputs contained in semi-finished goods. In bracket you write 8,100 into 8,100 into 85,000 divided by 1,35,000. 85,000 divided by 1,35,000. Chalo, how much beta? 5,100. Very good. Both the columns, CGST, SGST column, you have to put 5,100, 5,100. Everyone got it? Next. Inputs received on 31st January 2025 contained in finished goods. Directly you can take these values. Come on. Inputs contained in finished goods. How much? 9,300, 9,300 over. Last. Now comes your capital good. With regard to capital good, what did I tell just now? How much input you have to claim now? You have to take in remaining useful life, you have to reverse. But in the normal one, tell 5% you told, no, just now. Yes or no? Now, when they were purchased, 10/10/2024. That means October, November, December 1 quarter? No. Again, January, February, March, 3rd quarter? April, May, June. Because part thereof also you have to take full. This is 17th June. Correct or not? So completely how many quarters? 3 quarters. So how much percentage you have to reduce now? 15%. 5% into 3 quarters. So take capital ITC on capital goods. Write down. ITC on capital goods. Chalo beta. What will happen? 96,000 into no, not 15. 96,000 minus you write, not into. 96,000 minus 15% you write. Better. So don't get confused. What is 15%? It is 5% for 3 quarters, ma. Chalo, tell. 81,600. That amount only you can avail now. Correct or not? Now total ITC available. Total ITC available. How much? Total ITC available how much? Come on. $14,400 CGST, SGST. Correct? IGST. 12,000 plus 81,600. 93,600 total IGST. Every one of you, did you get? Then let's go to practice question number 10. Please see this one. PQR Limited, a registered person supplying taxable goods in Jaipur, has opted to pay tax on composition scheme. Composition means you have to reverse off the ITC, no? ITC, reversal of ITC. Just now we discussed 18 subsection 3, 6 and all. Yes? The following is the balance of ITC. Acha, with effect from 28th February. The following is the balance of ITC lying in as on 27th February 2025. Inputs lying in stock valued 1,68,000 including CGST and SGST 12%. Next. Inputs lying in finished goods for which invoice is not available but market price is available, which is rupees 89,600 inclusive of CGST and IGST. We need not worry about invoice when we are reversing. Invoice is required only when we are availing ITC, not at the time of reversing the ITC. Clear? Then input tax on capital goods purchased on 25th October 2024. Now with regard to capital goods, what is the point we have to be careful? How much reversal we have to do? Only the capital goods which is laying the proportion to the what? Tell remaining useful life divided by 60. I told no. Yes, so how much is the remaining useful life? Please see. 25th October it was purchased ma. That means October, November, December, January, February. So 5 months it was used. What is the remaining useful life? 55. So 55 divided by 60 into 72,000 we should get. Okay, that will come back. Then comes your balance lying in ECL rupees 1,10,000. So that is the opening balance lying in the electronic credit ledger. That also we have to reverse. Now calculate the amount to be paid by PQR Limited. Yes, put the heading. Computation of amount to be paid by PQR Limited. Computation of amount to be paid by PQR Limited. Computation of amount to be paid by PQR Limited. Particulars CGST, SGST, IGST. I think IGST is not required, ma. CGST and SGST is sufficient. Particulars CGST, SGST you write. Chalo. So first one, inputs lying in stock. Inputs lying in stock. So what will happen, ma? 1,68,000 is including that 12%. So what will happen? How to arrive at that? 1,68,000 into 12 divided by 112 you do. That 18,000 is nothing but 9,000 CGST, 9,000 SGST. Come on. Over. Did you write in the bracket 1,68,000 into 12 by 112 you write. Then only you will understand how we got that. Next, inputs lying in finished goods. Inputs lying in finished goods. 89,600 into 12 by 112. 9,000. So 9,600 again divided by 2. 4,800, 4,800. Next, ITC on capital goods. ITC on capital goods. What did I tell? Write in bracket. In bracket, write down 72,000 into 55 divided by 60. 72,000 into 55. Why? How I got 55, ma? 55 is in bracket. If you want, you can write remaining in what you call useful life. 33 and 33 you can write. Yes. Then balance lying in ECL, ma. That also we have to reverse, no? 1,10,000 divided by 2. Nothing but 55, 55. Correct or not? No. Then below that you can write GST payable. GST payable. How much more? 1 lakh 1,800. That is CGST. SGST is another 1 lakh 1,800. Total GST payable will be 2 lakhs 3,600. 2 lakh 3,600 over. Right. Now, tell me, in partnership law we have learned, when can there be a change in constitution? Admission of a partner, retirement of a partner, insolvency of a partner, expulsion of a partner, yes. Now, when there is a change in that constitution, what will happen to the amount of input which is lying in stock? Like for example, partnership firm got converted into LLP, or LLP got converted into private limited company, or sole proprietor became converted into partnership. Now what will happen? Whenever they are getting converted, the GST number will change, ma. For that reason, you cannot leave the ITC as it is. That is the reason they have brought this 18 subsection 3 into picture. So 18 subsection 3 is talking about transfer of ITC in case of change in constitution. Can you transfer or not? See there. Where there is a change in constitution of a registered person on account of what all? Sale or merger or demerger or amalgamation or lease or transfer of business. Now, he shall be allowed to transfer the ITC lying in electronic credit ledger as per rule number 41. What is rule 41? We will discuss later. Yes. Then, to whom such as sold or merged or demerged or amalgamated or leased or transferred business in such manner as may be prescribed. So they will give you various forms and all you have to fill up, then only you have to do that. Now what does rule number 41 talk about? Let's see what is the rule number 41. The registered person shall furnish. That's what some prescribed manner was there. Now what is the prescribed manner we are trying to tell? The registered person shall furnish the details in form number ITC GST ITC 02 on the GST portal. You have to give the details. Next, very important, in case of demerger, ITC shall be apportioned on the basis of value of assets of the new unit. So this is one important aspect where questions are being asked. Please be careful. One question also I have given. Let's see that also. Then he shall obtain a certificate from obviously a chartered accountant or a cost accountant stating that the transfer has been done according to the provisions. Lastly, the transferee must accept the details furnished in GST ITC 02 and must account for the and properly account for the inputs in his books of accounts. Yes. So mainly the second point, if you observe, in case of demerger, ITC shall be apportioned on the basis of what? Value of assets of the new unit. Based on that, one problem is there. Let's see. Practice question number 12. This is the last slide in our ITC. Let's see. And we'll do the problem also. R Limited, a registered manufacturer, demerged its entity into RX Cement Limited and RX Steel Limited. The total value of the assets of R Limited is rupees. How much? 25 lakhs. Total assets is 25 lakhs. And unutilized credit on account of CGST, SGST, IGST amounted to rupees 60,000, 45,000 and 84,600 respectively. The value of assets of RX Cement Limited and RX Steel Limited is rupees 12 lakhs and 13 lakhs respectively. So just now we told, no, in case of demerger, what did we tell? ITC shall be apportioned on the basis of value of the assets of new unit. So what are the value of assets of new unit in this problem? 12 lakhs and 13 lakhs respectively. And now he is asking you, discuss the eligibility of credit transferred to new units on account of demerger. So how to do this kind of problem? Put the heading, I'll tell you. Computation of ITC available to demerged entity. Computation of ITC available to demerged entity. Computation of ITC available to demerged entity. Particulars: RX Cement Limited, RX Steel Limited. Particulars, RX Cement Limited, RX Steel Limited. RX Cement Limited, RX Steel Limited. Over. Alright. Now, value of assets. Value of assets. How much? RX Steel Limited, sorry, Cement Limited is 12 lakhs. Steel Limited is 13 lakhs. 12 and 13. Over, did you put the respective values? Now below that, proportionate ITC. Proportionate ITC. Underline that. Below that, write CGST. In bracket, how much is CGST available? 60,000. So write 60,000 into 12 by 25, 16,000 into 13 by 25. How I got 12 by 25? Value of assets ma. Correct. That's all. Ratios. 12 by total value of 25 lakhs. 60,000 into 12 by 25, 60,000 into 13 by 25. Bolo beta. 28,800, 32, 200. Correct? Then SGST. How much is SGST in the problem? 45,000. So 45,000 into, again, same. 12 by 25, 13 by 25. 21,600. Next, 23,400. Lastly, IGST is there. How much ma? 84,600 into, again, 12 by 25, 13 by 25. 40,608 and 43,992. Every one of you, did you get the problem? Did you get the answer? Yes or no? Quickly, shall we see the recent exam question, January 2026 question? You should be able to solve it immediately. I'll just show that to you so that it will become easy. Yesterday, I asked you to download Saransh. Hopefully, it is done. Yes. I'm just zooming this so that it will become easy for every one of you. Right. So this is your, stop talking now. January 2026 exam question. So let's read. TTY Private Limited, a registered supplier in Bengaluru, has provided the following information of supply received or made during the month of June 2025. Supply of taxable goods to Mr. Sudhir of Hubli, Karnataka. That means it is in the same state, ma. Registered under the composition scheme in the state of Karnataka. Listen, this is how they'll confuse you. He is supplying to a composition person. No problem. He will charge normal rate only. A composition person should not charge it from other person. Okay, but composition here, person receiving the goods is under composition scheme, not the person who is supplying the goods. Okay, so 4 lakhs, since it is in Bengaluru, his TTY Private Limited is in Bengaluru, please see. And this is in Hubli, nothing but in Karnataka, so within the same state. So CGST and SGST will come on this 4 lakh rupee. Okay, next. Hiring receipts for supply of industrial heavy machines along with supply of machine operators. Now he says out of 9 lakhs, value of 2,25,000 belongs to supply of operators, not separately charged. No problem. It is just a works contract. Let it not be charged separately. Directly we have to take on 9 lakhs. Correct or not? This is your output tax, man, not input credit, my dear. Next, renting of dumpers, including drive. Renting of dumpers, one second. Yes, renting of dumpers, including driver given for transport. So how much it is? It is 10,50,000. That also is your income only. Next. This is one important point which I was telling you yesterday. Stock transfer between the branches. So see here. Stock is transferred without consideration to its branch in Shimoga, Karnataka, within the same state. I told you yesterday, within the same state, GST will not be applicable. Yes. So that is the reason he told branch has same GST in value and valuation rules, etc. The value, these are all of no use. Next, given on hire 26 motor vehicles, seating capacity of 14 persons, excluding driver 2. Karnataka State Road Transport Corporation, my dear, hiring of goods vehicle to Road Transport Corporation with minimum 13 passengers is completely exempt from GST. It is there in our exemption section 11. So that also will not be liable to GST. Clear? And now, inward transaction. See, to avoid confusion, above it was outward. Now, it is inward. What he says, purchased 4 electric scooters with the engine capacity of 23 cc for use of its employee for commuting within the office premises and nearby client locations. Tell me, are the vehicles used in the course or furtherance of business? Definitely yes, ITC we can claim. Then, yes, Vijay, managing director, went to Surat, Gujarat for a business meeting in 2025 and stayed for 3 days in Royal Residency Hotel registered in the state of Gujarat. Interstate accommodation. Okay, hotel accommodation charges paid 18,000 taxable value excluding GST for the stay. Now, for hotel accommodation and all per day, how much? 7,500 if you remember. Yes, up to 7,500 it will be exempted per day. Now, he gave 18,000 for 3 days. 18,000 for 3 days means per day it is only 6,000. So input, they wouldn't have charged any GST at all. So ITC will not be available. Next, additional information he has given. Please see. In the month of December 2024, the company had availed services in an interstate transaction with a taxable value of 6 lakhs. This transaction was liable to tax under reverse charge. Payment was made to supplier was not made till the current month. That is overdue for 180 days. When payment was not made, you cannot avail the ITC at all. Then, however, tax due under the said transaction was paid to government in December 2024 and input tax credit availed in the same month. So, in the December it was availed, it seems. Yes. Now, on 11th June 2025, he received a debit note of rupees 2,50,000. Just now, in ITC, one of the document is debit note. In respect of inward intrastate taxable supplies of service, the underlying invoice was issued in the month of October 2023, in which it was found later that the supplier had erroneously declared a value which is less than the actual value of services provided. Next, what he says, all the figures are exclusive of GST wherever applicable. All conditions necessary for availing the input tax credit has been fulfilled, and also that the details of GST paid on inward supplies are available in 2B. I was telling you just now, not in 2A, it should be available in 2B. Correct or not? There was no opening balance of input. Similarly, assume all inward supplies are used for outward taxable supplies only. Wherever details for place of determination of place of supply are not given in the question, it shall be taken as interstate transaction. So if any Gujarat, Ahmedabad is not mentioned, please take it as an interstate is what he is saying. Then assuming the rates of GST, service of hiring of heavy machine, IGST is 12 it seems, CGST is 6 and SGST is 6. Similarly, service of supplying machine operator without heavy machines, IGST 18, CGST 9 and SGST 9. Lastly, all other inward and outward supplies are IGST 18, CGST 9 and SGST 9. Now what is he saying? See there, you are required to compute the minimum GST liability. Now, this is what he is using, net minimum. That means whichever way is beneficial, you please arrive at the minimum amount of GST payable if to be paid in cash, if any, for the month of June 2025. See there, after utilizing the Input tax credit. Now note one point, see there. Calculate tax for each point separately. Don't mix everything and calculate. For every point he wants separate calculation. And legal explanation also are required. Forming part should form part of the answer, including the place of provision of supply. Now how to answer, and this is given for 10 marks, solid 10 marks. Let's see how to answer this question. See here. Computation of net minimum GST liability. Now see there, outward supply. First, Sudhir, if you remember, it was in, what you call, Karnataka, within the state only. So intra-state, correct or not? So 4 lakhs into that, 9% and 9% he has entered in CGST and SGST. Similarly, if you remember, hiring of industrial equipments also was there, that also was made, including the operator's gross value, 9 lakhs I was telling you. Do you remember? So directly on 9 lakhs he has charged 12%. Then, renting of dumpers, again, including drivers, 10 lakh 50,000, again, into 18% he has mentioned. Okay. Then, stock transfer, see, we discussed, it is nil, he gave very clearly. Then hiring of state, see there, to State Transport Corporation, exemption is available, I told. So that is why he took the value, but he took nil. Are you able to observe? Over. Outward supplies is over. Less. Input tax credit. Now see here. Eligible input tax credit, IGST credit is set off against IGST liability, it seems. IGST credit was there, that 86,400, that is being set off. Then CGST and SGST credit is set off against CGST and SGST. Nothing but 22,500 and 22,500. Balance is net GST payable. Minimum pay amount payable he gave. Now computation for total ITC available for set off. That 4 electric vehicles he purchased, 4,80,000 into that value he has taken. Okay. Then hotel accommodation, see, 18,000, but he didn't avail any ITC because nothing was charged, at that time. It was only up to 7,500, there is no ITC at all. That is why they didn't mention even rate of hotel accommodation also. Please see. Then availment of credit, see that 181 days payment was done after 181. So you cannot avail the credit because 180 days was the time period. They did not avail the credit also. Lastly, debit note, yes, we can avail, we told. So that's why 2,50,000 into whatever is the value they have given. And lastly, total input tax. So these values only he has taken in the above working. These 3 values only, if you observe, it was mentioned here. This one, these values, if you observe, these values came from there only. Are you clear about this? Yes or no? So with this, we are coming to an end of input tax credit and the solving of the recent exam question. Now time is 4:10. Yes, take break till 4:20 and come back. We will complete our registration, returns, payment of taxes, and if possible the tax invoice also. Okay, chalo. Right. So we had a comprehensive discussion of input tax credit before the break. Solid 2 hours 15 minutes we discussed about one small chapter, but yes, it will give you good benefits also, because one 10 marks question straight away we are solving. We have solved also. Apart from that, some practical questions also we have solved. Okay, now from here onwards, next 3 chapters will be 4 marks each. Okay, sometimes it is being asked for 4, sometimes it is being asked for 3 and all, so you need not worry. Let's focus. Now, next 3 are actually, I can say, interlinked with each other. Now, how interlinked is? Any person who is going for GST has to register himself. First point. Once he or she registers, they have to pay the tax. Once payment of tax is done, lastly, they have to file the returns. That's all. So, these are the provisions actually which are interlinked. That's why registration, payment of tax, and returns. These three we will continuously discuss one after the other. First we will see registration. Section 22 to section 30. These are the list of the sections. I'll just show you. Summary of section. Section 22 to section 30 deal with registration. In that, what they say is section 22 talks about voluntary registration. 23 persons who are exempted from registration. 24 compulsory registration. 25 procedure for registration. 26 deemed registration. 27 registration of a casual taxable person and a non-resident taxable person. 28 amendment in registration. 29 and 30 is cancellation and suspension of registration. Khatam. So first forming, last dissolving. That's how it is. So let's see one by one. Very, very simple. Happily we can remember all these provisions, and moreover, if you remember, after your exams you can start earning. How, sir? You can only do GST registrations by sitting at home. It does not require any qualification as such. That is the beauty of GST actually. A very good avenue for earning revenue. Okay. So let's see one by one. First, persons who are liable for registration. Let's see, once their turnover exceeds 20 lakhs or 10 lakhs in case of special category states, I told. Sometimes instead of 20 lakhs, those who are rendering services alone, okay, for them the turnover limit will be 40 lakhs instead of 20 lakhs. What are they and all? I have given you a summary. I'll show you for what all states 20 is applicable, what all states 10 is applicable, what all states 40 is applicable also I'll show you. Okay. So first of all, mandatory registration. If you see, every supplier whose taxable value exceeds 20 lakhs in bracket 10 lakhs in case of special category states. There are 4 special category states for which the 10 lakhs limit will be applicable. That also I'll tell you how to remember. Next, the threshold calculation. That is the 20 lakhs, how to calculate. It includes value of all supplies made by taxable person, whether on their own account or on behalf of all the principals. Then, in case of transfer of business, just now in the ITC also we have seen, last one was that only, rule number 41. In case of transfer of business, you can only transfer the ITC as per rule number 41, but you cannot transfer the GST registration, because the simple logic is GST registration is based on dash PAN number. Every person will have a different PAN number, so you cannot transfer the certificate. You should obtain a fresh registration. That is what he is saying in the last point. Now let's see what are the special category states. 4 special category states I have mentioned already there. Observe carefully. MMNT, you can remember MMNT. Yesterday I was telling you for composition Manstum. This is MMNT. Please understand. What are the things in MMNT? Manipur, Mizoram, Nagaland and Tripura. So yesterday also you had all these 4 in that 8 categories. That Manstum you had, apart from this you had what you call Arunachal Pradesh, Uttarakhand. Yes or no? Sikkim, correct or not? Yes, Meghalaya also you had. Here you do not have Meghalaya in the special category. Please understand. Manipur, Mizoram, Nagaland and Tripura. You have to be very, very careful in the exam. You will get confused. So that's the reason. Remember Manstum, MMNT here. Okay. These are the special category states. Now, higher threshold for those who are dealing only with goods. That means they don't deal with services. So for them, they have raised the limits to how much, my dear? 40 lakhs. Especially if you see, we are in 2 Telugu states. In Telangana, the limit will always be 20 lakhs. But in Andhra, it will go to 40 lakhs if you are dealing only with goods. Are you clear? So this benefit of 40 lakhs is not applicable to Telangana. Are you clear? It will be applicable to Andhra Pradesh. But I'll show you the summary of all these notifications. Don't worry. Now, exceptions to higher threshold. That is, who all cannot avail the higher threshold. Number 1, persons required to take compulsory registration can't go for this one. Second, suppliers of ice cream. These all were there yesterday also in composition scheme. Ice cream, tobacco, pan masala, edible, bricks, roofing tiles, etc. Those people. Similarly, persons opting for voluntary registration also can't go for this 40 lakhs. Lastly, interstate suppliers in specific states including Telangana, Puducherry, Arunachal Pradesh, Sikkim, Tripura. I don't know Telangana and all, it's not possible. So for that, let me give you one summary. It will be easy for you. See there, 10 lakh limit threshold will apply to both supply of goods or services or both, but in 4 states. MMNT, Manipur, Meghalaya is not there. Manipur, Mizoram, Nagaland and Tripura. That is what I mentioned there. 20 lakhs is again for supply of goods or services or both. All states, please see there, Telangana, specifically I mentioned Sikkim, Meghalaya, Uttarakhand, Puducherry, Arunachal Pradesh. Then what about 40 lakhs? Please see the limit of 40 lakhs. It is only for supply of goods, not services. Supply of only goods. Now see what will happen. Now see what will happen. For goods and all, see the states, Jammu and Kashmir, Assam, Himachal Pradesh and all other states. When we say all other states other than the first 2 category. That's why I told 40 lakhs is not applicable to the state of Telangana. Please be careful. Understood about this? Then, exemptions from registration. This is given in section 23. Persons who are exempted from getting yourself registered. Simple. First, a farmer. Instead of using the word farmer, posh language, agriculturist. Legal language, we have to use the word agriculturist. Similarly, a person who is having exempt business, that means, say for example, vegetable vendor is there. That is completely exempt. He need not apply for GST. Lastly, government might notify some people from getting themselves registered. So who are those and all? We have to wait for the government notification. Okay. So let's see some people who have already been exempted by the government. So see the next one. Government exempted persons. Those who are only reverse charge suppliers. Now this comes by virtue of notification number 2/2017. I was showing you yesterday. Reverse charge. Notification number 2/2017 very clearly says, if a person is supplying goods or services which are liable purely for reverse charge, then the supplier need not get himself registered. The recipient alone, if he is getting registered, that is sufficient. This was there yesterday also. Okay. Then interstate service provider up to a value of 20 lakhs. Obviously 10 lakhs in case of special category states need not register. The persons who are supplying handicraft goods also, in order to promote those villages from giving that handicraft goods. This what is that Bommalu they say? No. What is that village name for that Bommalu? Kondapalli Bommalu, correct. So that Kondapalli Bommalu and all, those who are manufacturing everything exempt from GST. Lastly, casual taxable persons. Now who is a casual taxable person? Yesterday also I was telling you. A person who does not have a place of business in a state, but he comes from other state to carry on the business occasionally. He is called as a casual taxable person. Such casual taxable persons who is manufacturing interstate supply of what he is going to do? Handicraft goods. Such persons also are exempted from availing registration. So registration need not be availed by number 1, agriculturist. Second, a person who does only exempt supplies of business. Yes, or nothing but who is dealing in only exempt supplies. Third, the persons who are notified by the government. So government has notified number 1, person who is having only supplies which are taxable under reverse charge. The person who is having interstate supply up to 20 lakhs or 10 lakhs in special category states. The person who is trading only with handicraft goods. Casual taxable person also who is doing interstate supplies of handicraft goods. These 4 people are exempted by the government. Understood? Then, who are the persons who are compulsorily required to get themselves registered? Now that is what section 24 I have mentioned. Compulsory registration. Who are the persons who are mandatorily supposed to get themselves registered? On the right side, if you see, you have persons making interstate supplies exceeding 20 lakhs. That is what government gave exemption only up to 20. Once it exceeds 20, mandatorily you have to get yourself registered. Similarly, casual taxable person making taxable supply. Now the government has exempted Casual taxable persons who are trading only in handicraft goods. All other goods will be liable to GST registration. So they have to register mandatorily. Similarly, see the next one, e-commerce operator. A lot of time we have spent behind understanding who is a e-commerce operator. They also mandatorily have to get themselves registered. Lastly, non-resident taxable person making taxable supplies. Now, who is a non-resident taxable person? A person, nothing but a foreigner, yes, who does not have any principal place of business in India, but he comes to India to do business occasionally. He is called as a non-resident taxable person. So this casual taxable person and non-resident taxable person, they have to get registered as per section 27. When I come to 27, we'll discuss once again. But let me tell you, since the point has come, and we are also in compulsory registration concept, let me tell you, this casual taxable person and a non-resident taxable person must apply for registration 5 days before they start the business. And they also have to deposit tax also in advance for the period for which the registration is granted. Maximum period for which the registration will be granted is only 90 days. And whatever tax they deposited will go and sit in the electronic cash ledger, not in the credit ledger. Now the amount what is sitting in the cash ledger can be utilized to pay any tax. Now if they want additional number of days more than 90 days, they have to make an application once again seeking for extension. For that extended period, again they have to pay the tax in advance. These are the points what are there in section 27. When I come to 27, it will become easy. Once again, I will not explain. Okay, chalo. Then who are the others who are mandatory required to get themselves registered? So if you see, tax deductors, TDS persons. If you remember, in our GST, a government officer must apply for TDS. I mean to say, when I say he has to apply, that means he has to take a TAN number. Okay, then he has to deduct TDS as per Income Tax Act. What about GST? TDS in GST. TDS in GST, first he has to obtain GST registration to deduct TDS. That's why mandatory person to obtain the registration is tax deductor. So they will deduct TDS as per section 51. 51 of the CGST Act very clearly specifies who has to deduct the TDS. Okay. Then agents. Who are the agents? Nothing but a person who are making the taxable supply on behalf of their principals is called as an agent. They also have to get themselves registered. It is not sufficient if the principal alone is registered. Then third, input service distributor. Just now before the break, I have explained who is a input service distributor by taking the example of Hindustan Unilever Limited. Correct? Then next, e-commerce suppliers. Number of times we have discussed the same. I don't want to discuss on the same point. OIDAR services. Service providers. What do you mean by OIDAR? Online Information Data Access and Retrieval Services. In short, I will tell you Google. Online Information Data Access Retrieval Services. So if Google is doing that business, then definitely it also has to get itself registered. So the persons who are providing OIDAR services also have to get themselves registered. Clear about this? Then what is the procedure for registration? Come on, you tell me. To obtain GST registration, what are the documents required? First you tell me that. First PAN. No Aadhaar. First PAN. PAN lekapothe no registration. First. Then apart from PAN, you should have email. You should have phone number. Wait. Once you give all this information, a OTP will be sent to your mobile and email. Once, listen carefully, once the OTP is sent and validated, what will happen? A TRN number will be generated. TRN means temporary reference number will be generated. Now, using the temporary reference number, you have to fill part B information. Part B, what all will be there? Your information will be there. Your place of business information also will be there. Apart from that, your Aadhaar details will be there. Then you have to verify it using your OTP. Once you verify it using OTP, another number will be generated called as ARN number. ARN means application reference number. Now that number can be used to track the status of GST registration. This is the process. Why I explained this, even though it is not actually required for you, is I told you after you complete your exam, you can start off with this GST registration. You can start earning money. Are you clear? That's the reason I told. And it does not require any qualification. So see there. Every person liable for, now we are going to provisions. Every person liable for registration under section 22 or 24 must apply within, just now in one problem also we did, within 30 days of he becoming liable for registration. We did one problem also. Second, casual or non-resident taxable person must apply within 5 days, which we have already discussed just now. Multiple businesses, that is, if a person is having multiple business in every state, like for example, I am running oil business, I am also doing detergent soap business. Now what should I do? I can take separate registration for oil business, separate registration for detergent business. Are you clear? Or in one registration itself, I can add multiple products and take the registration. There's no problem at all. Then voluntary registration. Now even though my turnover does not exceed 20 lakhs, I can happily go for voluntary registration, but one condition, be careful. If you obtain voluntary registration, you cannot apply for cancellation till 1 year. You cannot apply for cancellation till 1 year. You have to be very, very cautious with that one. Now you might ask, why that 1 year, sir? Arey, that is the time limit put by the law. You have to follow. Are you clear? And moreover, who asked you to apply for registration? Did government beg you? No, it is you yourself voluntarily. Then follow the government's instruction. Okay? Then PAN requirement. I told no, without PAN you cannot apply for GST. See the next one. TAN alternative. I told no, for TDS deductors and all. Even if they don't have PAN, they can apply through TAN also. That's not an issue. Next, multiple registrations. Persons having more than one registration shall be treated as distinct persons. I told you, I am having one office in Hyderabad, one office in Vijayawada, and I took registration for both the offices. So ultimately what will happen? It will be, I will be treated distinct persons. Yesterday I showed you one map also where distinct locations were there. Yes. Next, SEZ unit. One very important, a person having a unit in special economic zone must apply for separate registration distinct from the place of business outside the SEZ in the same state or union territory. Like what is it saying is, listen, I am having one office in SR Nagar. One unit I also want to start in High-Tech City, Raheja Mind Space. Have you heard about this? No, in High-Tech City there are big companies, no? That is a SEZ. SEZ means Special Economic Zone Unit. So if I have an office there also, now even though I have office in SR Nagar and registered, I should obtain a separate registration even for the office what I have set up in the Special Economic Zone. You might ask me why I should register Special Economic Zone. The reason is for the offices which are located in Special Economic Zone, GST is 0%. Are you clear? But for offices which are outside, GST will be applicable. So to have a bifurcation, the law is saying, boss, you have to apply for separate registration if you have an office in Special Economic Zone. Clear? Then registration procedure. What is the procedure? First, identity validation. I told you, no, your PAN number, email ID, phone number will be validated. OTP will come, I told. Then TRN generation. I told, no, after OTP, TRN will be generated. After that, what you should do? You have to fill part B and submit the application. Once you submit, what number will be generated? I told ARN number will be generated. Using the ARN number, what I told, you can track the application. Now see the registration procedure, application processing and all. First, your documents will be examined by the officer. If they are found okay, no problem. Otherwise, the officer will raise a query within 7 days, to which you have to reply also within 7 days. A show cause notice will be issued to you, to which you have to reply within 7 days. If your reply is satisfactory, he will give approval. See there. Approval, if found proper, registration is granted within 7 days of submission. If Aadhaar authentication is also done, you have to do Aadhaar authentication. That is, you have to enter the Aadhaar number and OTP what you receive on the mobile number into the system. That's called Aadhaar authentication. Then deficiency, as I told, if the application is not found to be proper, they'll give you the notice within 7 days, to which you have to reply within 7 days. After your reply, if your reply is satisfactory, they'll give you approval. Otherwise, your application will be rejected. This is the process of registration. Then, as I told, Aadhaar authentication requirement. See there. Mandatory, you should do this one. So, what is he saying? Every registered person must complete Aadhaar authentication in the prescribed form, manner and time. Okay. Then alternative authentication. If Aadhaar is not allotted, the person must adopt alternative means, visible means of authentication. There is one authentication method called VID number. Virtual identity number is what they are saying. So you will be allotted one virtual identity number. Using that, you have to do the authentication. Because non-residents will not have Aadhaar number, no, here. For them, that virtual identity number will come. Then next, authentication failure. If authentication is not completed, the registration granted shall be deemed to be invalid. Invalid means nothing but it will be ultimately rejected. Then, non-individual authentication. That means if the taxpayer is a company or a partnership firm, then the company and partnership firm will not have Aadhaar number. Then what? The concerned person's Aadhaar number should be given for authentication. Like in case of company, a director. In case of partnership firm, the partner's Aadhaar number should be given and it should be validated in the same way how it is done for individuals. Okay. Then exemption provision. The central government may exempt certain classes of persons from authentication requirement. Then he gave authentication notice. A notice shall be issued within 21 days from the application submission if a person fails to complete Aadhaar authentication. Then, just for your knowledge purpose, I have given you this image also, GST registration process through Aadhaar card. First, what will happen? He has an option for Aadhaar authentication. Authentication link will be sent via email. Then next, what he has to do? Enter Aadhaar number and click submit. OTP will come. Then enter the OTP and validate it. Then success message will come. After this, what number will be generated? Aadhaar number. What number? ARN will be generated only after you do this Aadhaar authentication. Otherwise, ARN will not be generated. Please be careful. Based on only if ARN is generated, your application is set to be submitted. Otherwise, your application is not yet submitted at all. Then comes your registration procedure. Final steps. What are they? Verification and decision. As I told, registration number or unique identity number shall be granted within 7 days. After that, certificate. They will issue the certificate in GST REG 06. REG means registration. Okay, 06 they will issue the certificate. Then, deemed approval. What do you mean by deemed approval? If you do not listen to the, if you don't get any, query from the officer within 7 days. If the officer is not satisfied with your application, he should raise a query within 7 days. If he does not raise any query within 7 days, it is deemed that your registration has been approved. Then last one, special organization. Special organization means you are having this United Nations organization and all. For them, they will not have Aadhaar. You cannot mention any one person's Aadhaar and all. For them, a unique identity number will be granted. That number itself is the GST number for them. Okay. Then, deemed registration under section 26. Now we have no CGST, SGST. No. If any registration was granted under CGST law, it is deemed that registration is given even under SGST law. Now, if any registration was given under SGST law, it will be deemed that registration is given even under CGST law. That's called deemed registration. You might ask, why sir this kind of situation, when it will come? Listen, I'll tell you, whenever you are making an application for registration, 90% of the applications will be allotted to state government. The system only will allot more. 90% to the state government, 10% only will go to the central government. That 10% also nothing but because you are rendering some services. Because if you are buying and selling goods, that should happen within the state only. Services can happen across country. That is the reason why if you are into the manufacture or trading of goods, your application by default will go to state government. If you are rendering services like chartered accountant services, by default the application will go to central government. So 90% of the applications will go to state. Now if state government is approving them, it is deemed that even central government has given approval. Same way, 10% applications which went to central government, if central government approves them, it is deemed that even state government has given the approval. That is the meaning of deemed registration under section 26. Then comes your 27. I was telling you, casual taxable person and a non-resident taxable person. I have given the image also for you to understand it better. In an exhibition, generally what happens, people come occasionally. Because exhibitions do not happen permanently, no. Like if you take Nampally, Numaish. Are you aware of Nampally Numaish exhibition? Industrial exhibition goes on. Yes, that exhibition starts only from January 1st. It goes on only up to February 14. 44 days, 45 days. Not more than that. Now, for that 45 days, people from Kashmir travel all the way to sell their dry fruits, blankets. People from Rajasthan, Jaipur come and sell this salwar, chudidars and all. Yes, people from perfume industry like Dubai and all, they come here and sell. Those people are called casual taxable person. If they are in India, they are casual taxable. If they are coming from outside India, they are non-resident taxable person. Simple. What did I tell for this casual taxable person, non-resident taxable person? When should they apply for registration? Fast. 5 days before the start of registration, start of the business. By applying, what they have to do? They have to select the time period up to which they want registration. Maximum time period allowed is how much? 90 days. For the time period, whatever is allotted, what they have to do? They have to pay the tax in advance. Whatever tax they pay, where it will go and sit? Electronic cash ledger, it will go and sit. Correct or not? The amount sitting in electronic cash ledger can be used to pay what? Any output tax. It can be output tax, interest, levy, penalty, etc. etc. Now, if they want to extend the registration, what will happen? They have to once again make the application, and for that extended period, the tax they have to deposit in advance. That amount also again will go and sit in the electronic cash ledger only. Clear about this? That is what is the provision of section 27. Then comes your section 28. Amendments in registration. What do you mean by amendment? After registration, I want to change my office. Or if it is a partnership firm, I want to change the constitution because one partner has got admitted or one partner has died. Hence, I have to remove his name from the partnership firm. Hence, what will happen? I have to make application for changes in the GST registration also. That application for changes is called as amendments. This amendment can happen in two ways. Amendment in core fields, amendment in non-core field. Core means important. So what could be core field, you tell me? Change in the principal place of business is a core field. Change in the constitution is a core field. Change in the nature of business is a core field. Change in the name also is a core field. What could be non-core field now? Phone number, email ID, these all are your non-core fields. So application for amendment can happen in for two reasons. Number one, change in the core fields. Number two, change in the non-core fields. Now tell me, out of these two, which one require the approval of the commissioner? Core fields only require the approval, not non-core fields. Non-core fields, straight away it will be approved. Because they are not important. Core fields only require the approval of the commissioner. So let's see one by one. Amendment timeline. I have bolded one word. Please see. Any change in your register office should, or any change you want to make, you should apply within 15 days along with the supporting document. I have already bolded that number of days. See the next one, core versus non-core fields. So amendment can happen either in core or non-core fields. Then PAN changes. I told just now, when you are selling away your business or converting your business, ultimately PAN number will change, I told. When PAN number changes, automatically new registration is required. Lastly, core field examples I have given you, please see. It includes change in the legal name, address of principal place of business, additional place of business, and change in constitution. Then comes your cancellation and suspension. Now, something new they brought, not new for you, Generally, in cancellation, earlier when GST law came into picture, only one thing was there, that is your cancellation. Later on, they have brought even something called suspension. That is temporary cancellation is called as suspension. Now, why, sir? Why they introduced this concept of suspension? The whole idea is, listen, if the government directly cancels the registration, from that day onwards, the taxpayer will not be able to do anything in the portal. Like, a taxpayer is honest. He wants to pay the tax. He cannot pay the tax because already the registration got cancelled. Now what government has done is, let's not do such kind of harsh things. First, let us suspend. And then we will ensure that all the taxes or all the dues are paid by the supplier or by the taxpayer. After the taxpayer has paid all the dues only, we will cancel their registration, is what they have told. That is the reason why they want a temporary cancellation solution. For that, they brought this concept called suspension. Did you understand the whole idea of suspension? 29 and 30 is talking about this suspension only. So, this first cancellation can happen two ways. One is suo moto by the officer. Second, on an application made by the taxpayer. Whenever suo moto is happening, suo moto, you have learned, no? Suo moto means officer on his own, he is going to cancel the registration. Before cancellation, always remember, he will give a show cause notice. Show me a cause as to why I should not cancel the registration. This is the lining which will be there in the show cause notice. Without giving show cause notice, you cannot directly cancel the registration of the taxpayer. Law is putting that restriction on the GST officer. So GST officers have to give the show cause notice and then only they can cancel the registration. So let's see one by one when the registration can be cancelled. So see, two circumstances I gave. One is suo moto cancellation. Other one is what? Application based. Nothing but see, the taxpayer himself, he is going to apply. Now, grounds for application based cancellation. When can the application, you tell me, when will a taxpayer like me, when will he apply for cancellation? Number one, I discontinued my business. No. Number two, the taxable supplies would have become exempt supplies. No, I am not required to register, no ma. Then third, change in constitution. Just now we told, no, business entity, the complete registration has to be changed. Then lastly, I told, no, partnership firm getting converted into LLP. That's called change in constitution. Okay. So four circumstances. Please see. Number one, discontinuance of business. Second, change in constitution of the business entity. Partnership firm, one or two partners got added. Third, transfer of business due to amalgamation, demerger or death of the sole proprietor. Lastly, the taxable person no longer liable for registration. That's what I told. All goods, taxable goods now became exempted goods. I am not required to get myself registered. Now, what are the circumstances when officer will initiate the cancellation? See the next one. Officer initiated cancellation grounds. You tell me, when will officer start issuing cancellation order? Simple. Number one, you obtained the registration by way of fraud, she told. Second, you obtained registration from a place where you are not at all doing the business. I obtained registration for this room, but in this room I am not there only. It is vacant. Third, the supplier or the taxpayer himself is non-existent. Non-existent means already kicked the bucket. He is in the, paralokam. Hence, how will he run the business? It's not possible. Then, next, if the taxpayer failed to file GST returns, then also the assessing officer will cancel the registration. So 4 points I gave. Please see. Place of business issues. That means no business is being carried on from the place. Second, fraudulent invoicing. Fake invoicing here. Yesterday I was telling you, many people raise the invoice without movement of goods. Third, anti-profiteering violation. What do you mean by anti-profiteering, ma? Any idea? charging GST on MRP. That is called anti-profiting violation. You should not do that because MRP is inclusive of taxes. No. If you charge any unreasonable profit in the name of GST, that will be called as anti-profiting. Then lastly, return filing defaults. If you fail to file the return for 6 consecutive months, or if you have taken it on a quarterly basis, 3 consecutive tax periods. Consecutive means continuous. If you are not filing, over, khatam. He will cancel the registration. But before cancellation, what I told? He should issue a show cause notice. And now see, additional grounds for officer. Number 1, business commencement. You didn't start your business at all. Then also the officer can, cancel the registration. Fraudulent registration. Fraudulent invoicing earlier. Fraudulent invoicing was there. Now I am saying fraudulent registration. That means you obtained registration by way of fraud. Now listen. Recently there was a case in GST. Are you aware? Biryani case. No. 70,000 crore fraud happened in biryani centers. No. You're not aware of this. Arey, that happened in our Amirpet area only. You don't know that? That is why following news is very important. Not always Insta Reels, Snapchat. Yes, don't do all those things. Importantly, your news is there. 70,000 crore GST fraud has happened. You know that? Because of that fraud, even income tax also has come into picture. So someone who has obtained registration by way of fraudulent means, like I took his PAN number and I have taken the registration. I am not paying GST at all. Now, to whom the officer will go? They'll go to him, not to me. That means registration was obtained by way of fraud. They will cancel. Understood about this? Then, before cancellation, I told no, they will first suspend it. So, what is the process of suspension? See there. Application. When a registered person applies for cancellation, the registration is deemed suspended, not cancelled. Suspended from either the date of application submission, or nothing but submitting the application, or the date from which the cancellation is sought, whichever is later. What do you mean by this? Today I applied for cancellation. While applying, I told, please cancel my registration from 1st April only. Today is what? 14th April. I told you, please cancel from 1st April. Now, 1st April or 14th April, whichever is. Later, from that day, suspension will be given. Okay. Next. During suspension period, the taxpayer will not be allowed to file any GST return. He cannot do anything. Yes. Lastly, revocation of suspension. When will they revoke? Suspension is automatically revoked upon completion of cancellation proceedings. So they thought, yes, this has to be cancelled. Once they have cancelled, suspension will be revoked, because keeping suspension active and cancelling is not possible. Both cannot be done. Either cancellation or either suspension only can be done. Then cancellation application procedure. Now, electronic application. Obviously, I told you, non-intrusive system in GST. So, no question of human interference. Everything is sitting in the system. You can do. Next, proper officer authority. What do you mean by that? Registration may be cancelled by proper officer based on application for prescribed period and manner. So, every officer cannot accept the cancellation. Only the authorized person can do that. Then, inventory documentation. What do you mean by inventory? You have to mention in your application for cancellation what are the details of inputs in finished goods, semi-finished goods, inputs contained in finished goods and capital goods. Why you should mention? If you remember, just now we did 18. Reversal of credit has to be done. That's why you should mention all these details. Lastly, liability settlement. What do you mean by liability settlement? I have to pay 1.5 lakh in GST. You know what people used to do in 2017-18 and all, when GST came newly? Just because they have to pay GST 1.5 lakh, you know what they used to do? Just apply cancellation directly. Idi cancel cheskunta, inkoti తీసుకుంటా. This is what was the mindset. Then they brought this provision. Beta, if you apply for cancellation, your liability is not going to come to an end. Your application will be cancelled only after you pay all the liabilities. So you cannot escape from the liability is what the law is saying. Understood? Then cancellation processing timelines. What are the application processing timelines? Let's see. When person is no longer liable for registration, the proper officer must issue cancellation order also within 30 days from the date of submission of the application. Second, suo moto procedure. Suo moto means officer himself. What I told, when officer himself is going to cancel, what he has to do first? Asha, fast. Officer cannot cancel the registration without dash fast. Without issuing a show cause notice. I don't know. Then lastly, after he issues show cause notice, he will give you time of 7 days to respond. If you don't respond, then he will cancel. Then post cancellation, what will happen? Post show cause notice, what will happen? If you don't respond within 7 days, yes, he will directly cancel. If you respond and your response is satisfactory, what will happen? The officer will drop the proceeding. If it is not satisfactory, he will directly cancel the registration. This is what has to be done. Okay. Then credit reversal requirements. Just now we discussed on cancellation. First you have to give the details of input lying in stock, input lying in semi-finished goods, input lying in finished goods and capital goods. That credit whatever is there, you have to reverse it. That is as per section 29 subsection 5 and 29 subsection 6. How much you have to reverse? Please see. The output tax payable on such goods if sold or ITC in respect of inputs held in stock, input contained in semi-finished goods, input contained in finished goods or capital goods as on the day immediately preceding the date of cancellation. You have to pay off either of this, whichever is higher. Okay, I have mentioned already, higher of those two. Then important restrictions and continuity of liability. I don't know, 1 year restriction will be there. What is 1 year? I was telling you, if you remember, if you obtain registration voluntarily, they will not allow you to cancel the registration till 1 year. Do you remember? Then second point, UIN holders. What are UIN? To whom UIN will be given? I told this United Nations organization and all which do not hold Aadhaar number. For them, UIN number will be there. They cannot apply for cancellation directly. Similarly, continuing liability. What did I tell? Just because you have to pay GST, you can't apply for cancellation. And just because you apply for cancellation, it will not reduce your liability. You are still liable. Are you clear about this? Then, cancellation under CGST, SGST shall be deemed as if it is done under SGST also. Just now we had no deemed registration. Deemed cancellation also is same. Okay. Then, revocation of cancellation. Now, when will the officer revoke the cancellation? Tell me. Simple. When assessee had filed all the pending returns, he will revoke. Because assessee, I mean to say, the taxpayer would have made a mistake and he did not, file the returns. Now he realized that and he wants to file the return. Then the officer will revoke the cancellation. So see there. When the registration is cancelled by proper officer, suo moto, registration person may apply for revocation also within 30 days from the date of service of cancellation order. And now, pre-revocation requirements. If cancellation was due to failure in filing the returns, and now what will happen? See, all dues must be paid, all pending returns also must be filed. Lastly, post-revocation. All returns due from the date of cancellation order till the date of revocation of suspension must be filed within 30 days. Then only your cancellation will be revoked. Otherwise, cancellation will continue. Then, retrospective revocation and officer's decision. If registration was cancelled with retrospective effect, retrospective means today they gave notice to cancel from 1st April itself. Now what will happen? All returns from effective from the date of cancellation till the date of order of cancellation must be filed. And all taxes also have to be paid. Same logic only. Then proper officer must make determination within 30 days in application, 30 days of application receipt. If he is satisfied, he may revoke the cancellation. If he is not satisfied, he will reject the application and he will cancel. Rejection procedure. But before rejection, what he will do, I told, he will issue a show cause notice to which the taxpayer has to reply within 7 working days. If he does not reply, ultimately again, it will be treated as if he is not interested in the registration and they will cancel the registration. So these are the provisions regarding registration and cancellation which will be asked for 4 marks, ma'am. Then having said that, we will have to go for payment of tax. Very simple. I'll tell you what has to be focused in this payment of tax, because it contains only 2 sections, ma'am, section 49 and section 50. That is what is there in payment of taxes. Now what it says is, section 49 tells you the mode of payment of tax. How you can pay. Yes, what are the modes? Listen carefully, your taxes, that is GST, can be paid either through NEFT. NEFT means National Electronic Fund Transfer. RTGS, Real Time Gross Settlement. Debit card or credit card also. Now it is available. Earlier it was not. Next, net banking, internet banking also you can pay. Apart from that, you can also pay by going to the bank. We call over the counter. We call it as over the counter. But when you go to the bank, you can pay not more than 10,000 rupees. Rest all you have to pay, if it is more than 10,000, only through other features. Now they have also started UPI also. Yes, that is the Google Pay, Phone Pay, etc. Now see, payment of tax, 49 I have given. Internet banking, debit or credit cards, NEFT or RTGS, and lastly, over the counter. In the over the counter, you see the limit, I have given you 10,000 rupees. And listen carefully, if you pay the tax, yes, the amount will always go and sit in one ledger called electronic cash ledger, not in credit ledger. Yes, the amount which is sitting in electronic cash ledger, what I told, it can be used to pay any taxes. But if the amount is going and sitting in credit ledger, you can use the balance lying in the credit ledger only to pay output tax, not to pay any interest or fees or late fee or penalty, etc., etc. Okay, so let's see that in the form of chart I gave ma. Electronic payment of tax, regular tax can be paid using the balance lying in electronic credit ledger or cash ledger also. But what about tax, penalties, interest and all? That can be paid only using cash ledger, not using credit ledger. Okay. Then, what are the features of modern tax payment system? 3 important features I gave ma. It will transmit the data to the government immediately. So see there, digital transformation. You need not store the challans in the physical form. Always they are in the digital form. You can retrieve any time. So you need not save it. So that's called digital transformation. Then taxpayer convenience. You can sit at home or sit in even in Dubai and pay the tax here. There is no problem. Lastly, enhanced efficiency. What do you mean by enhanced efficiency? For government, it gives a logical collection of tax data. How much was the tax which is collected in this month? Government will be able to get the data immediately and effectively. Then there are 3 ledgers: electronic cash ledger, electronic credit ledger, and electronic liability ledger. So I told you just now, cash ledger can be used to pay any amount of tax. Credit ledger can be used to pay only the output tax. What about liability ledger? Any balance after net off. Just now we did 1 or 2 problems where we got GST payable. Once we get GST payable, that payable amount will go and sit in the liability ledger. That amount once we pay, liability ledger will become nil. That amount will come and sit in the cash ledger. Are you clear? That amount you can use to, set off your liabilities. Right. Now, what will be there in the electronic cash ledger? Just let's see overview of the cash ledger, because they are asking you. What points they are asking you, I'll tell you. First, the electronic cash ledger can be maintained in GST PMT 05. Form number to maintain MCQ. Multiple choice question, I'm telling you. Electronic credit ledger, cash ledger shall be maintained in dash form. GST PMT 05. Then, the challan generation. A taxpayer or the representative must generate the challan in GST PMT 06. Now sometimes what will happen, because of technical issue, like for example I am paying the tax, suddenly power went. Now my payment is hanged in between. That means it did not go to the government, it is not even in my account. Now what will happen? It is a matter of concern for me. What will I do? I have to raise a query. I have to raise a request using GST PMT 07. So 5, 6, 7. 5 is electronic cash ledger. 6 is the challan. 7 is the discrepancy. If any discrepancy is there, I have to raise my concern by filing GST PMT 07. Then see here, deposit date, obviously. What will be the deposit date in the government? Only when the government gets the money, that day only is the deposit date. Why are you telling this, sir? Because sometimes when I pay through NEFT or RTGS, I will send the money today through my bank, but it will get reflected in the government's account only tomorrow. So date of payment will be tomorrow only, not today. Okay, that's what he is saying here. Then this is the point I was telling you with regard to GST 07. See there, once the payment is successfully credited to the government account, a unique challan identification number is generated by the collecting bank. This SIN is indicated in the challan. But see the next paragraph, troubleshooting I gave. What is the troubleshooting? In cases where the bank account is debited but no SIN is generated, that is no challan identification number is generated, what will happen? The taxpayer must file a representation electronically in GST PMT 07. Yes, and then only the problem will be solved. Then the cash ledger can be utilized for what all? We have already discussed it just now. It can be used to pay any amount. Okay. Then new flexibility which they have bought, the amount available in cash ledger can now be utilized for payment of any liability across major or minor heads. What are major and minor heads in GST? Major head means CGST, SGST, IGST, UTGST. That's called major. Minor means tax, late fee, interest, penalty. That is called minor head. So you can utilize it. Cross utilization is always available. Okay. For which you have to listen, some amount of tax is lying in CGST, but I want to shift it to IGST. Can I shift it? Yes, by filing one form called GST PMT 09. That is one form. That is what I mentioned, transfer process. See the next one. The registered person must make a formal request in GST PMT 09 to initiate such a transfers between different tax heads. And cross transfer provision I have already explained. You can utilize the amount from one account to other account. Then comes your credit ledger. Now what all will go and sit in the credit ledger? Just now I told, whatever input you are availing, that will go and sit in the credit ledger. Credit ledger can be utilized to pay what? Come on. Only the tax. It cannot be used to pay any other thing. So see here, the electronic credit ledger is maintained in GST PMT 02. So multiple choice question. Cash ledger in 5. Credit ledger in 2. Okay. Then credit mechanism. The amount of ITC claimed in returns filed by a tax person is automatically credited to electronic credit ledger. Not cash, credit ledger. Discrepancy reporting. A registered person who notices any discrepancy in there electronic credit ledger immediately should raise the discrepancy. That means some people might have wrongfully given us the ITC. They might have entered a wrong GST number and it would have come here to our account. Immediately we have to raise a query in GST PMT 03. That is called discrepancy. Okay. Earlier in cash ledger, if there was a discrepancy, what is the form? GST PMT 07 was the form. But here GST PMT 03, you have to raise the query. After that, from what all amounts will come and sit in the credit ledger? What are the sources? I have given you. Number 1, from inward supplies, any purchases. Second, ISD distribution. Hindustan Unilever Limited is giving, yes. Third, stock credits. We have no, section 18 we discussed, no, just now. Then, conversion credits. Transfer of businesses and all we have discussed just now. When we transfer, automatically credit also can be transferred as per rule number 41 we discussed. Last, reverse charge. Any inward supplies on which ITC has been paid under reverse charge, credit will be available. Okay, these are the sources of amounts in the credit ledger. Then restrictions on utilization, very important. 86 capital A. Restrictions on utilization of credit ledger. Now listen. A person whose turnover in a month exceeds 50 lakhs, okay, what will happen is they cannot use entire amount of credit what is lying in the credit ledger. 99% of that only they can use. 1% they have to pay through cash. That is a restriction which is given by rule 86A and 86B. So let's understand carefully. The commissioner or authorized commissioner not below the rank of assistant commissioner can impose restrictions on utilization of available ITC. If you are not an existent person, that is, you are not at all available, what will happen? Ultimately, you cannot avail the ITC at all. You are not carrying on the business, you cannot avail the ITC. But if you carry on the business and your monthly turnover, as I was telling you, 86B is not there here, okay. If you are not receiving the goods, simple ma, all conditions in ITC section 16, if they are not satisfied, the officer can restrict your ITC. That is as per 86A. There is one more rule called 86B, which I was telling you just now. If my monthly turnover is more than 50 lakhs, 99% of my input only I can use. 1% I have to pay through cash ledger. Remember that point carefully. That is given in rule number 86B. Okay. Then electronic liability ledger. Now it is maintained in GST PMT 01. Again I am revising. Cash ledger 5. Credit ledger. Liability ledger 1. Khatam. That's how you have to remember. Multiple choice questions. Please be careful. Now debit entries. What all amounts will be debited to this liability ledger? See there, the tax, interest, late fee or other amounts payable as per the returns will be debited. Then amounts determined by the proper officer in proceedings will be debited. Similarly, tax and interest payable due to mismatches. Mismatches means I purchased goods worth rupees 1 lakh, but I took a credit for goods worth rupees 10 lakhs. I entered 1 zero wrongly, thinking 0 is not having any value. But it has lot of value in our accounts. Don't think like that. Okay. Then tax and interest payable. That's over. Next, interest accruing from time to time. These all will be debited. Now, this ledger also should be credited. No, liability ledger also should be credited. So, see the credit entries in the liability ledger. What are they? Tax deducted. TDS is there. It will be credited. Similarly, TCS has been collected. That also will be credited. Reverse charge payments also will be credited. Then unregistered supplier tax, that is, I supplied goods. I am an unregistered person. I supplied goods to registered person. Registered person has to pay tax on reverse charge. Yesterday only we discussed. That and all will be credited. And lastly, composition scheme payments also will be credited. These are the amounts which are to be credited in the electronic liability ledger. Now, if you avail, last one ma, if you avail any ITC wrongly, or if you suppress the value of outward supplies, you will end up paying interest under section 50. So section 50 says interest will be 18% per annum. 18% means 1.5% per month. For what? For suppressing the outward supplies. Instead, if you have claimed excess ITC, you won't believe interest will become 24%. 2% per month. That means excess ITC you should not avail. That is the condition. For that only interest payment is there in section 50. That you can read later also. That's not an issue. Okay. So with this, the payment section is over. Payment of taxes is over. Lastly, we have returns in GST. I'll give you a list of returns. You can understand it easily. Yes. So the lady is filing the return. Don't see her, see him. Introduction to filing GST returns electronically. I told you just now also, no human intervention. Everything electronic only. That's why I told after your exams also you can sit at home and you can file the GST returns. No qualification also is required. Only thing is understanding the GST subject is required. That's all. Okay. So mainly the one which I gave in pink color, What are the benefits of filing the GST returns? They are asking you. Return solves the following purposes. What are they? It will pass on information to the government. No, that is the first point. See there, information transfer to tax department. Similarly, second, compliance verification program. What is this compliance verification program? Compliance verification is nothing but whether I complied with all the provisions of the law or not properly. To check that, they will see the returns. Then third, finalization of taxpayers' liabilities. Just now I told, electronic liability ledger will have all the amounts netting off. After net off, that is output minus input. That's called finalization of taxpayers' liabilities. Then you have data for policy decision making. The government will always have the data with them to make any decisions, like to exempt any goods or increase any tax rates. For that, the policy decisions, this will be helpful. Lastly, management of audit and anti-evasion program. So, to whether to conduct audit for someone or not, the data will be helpful. For that reason only they are asking you to file the GST returns. Now, what are the types of GST returns? GSTR 1, you know, it talks about outward supplies. Yes, all the sales has to be entered here, and that GSTR number 1 has to be filed on or before 10th of the following month. In some cases, depending on the turnover, they have increased that to 11th of the following month. Okay, but that is not widely applicable to entire India. That's why we are not going to discuss about that 11th concept. Second, GSTR 3B. Earlier 2 also was there, but now they have removed because 2 is only an automatic form now. GSTR 3B, it is a monthly return. Again, it has to be filed by 20th of the next month. Now comes GSTR 4, where there is an amendment, my dear. Amendment is not in this year. Last year only amendment has happened, but last year they didn't ask in the exam. So this year they might ask, because that amendment came in the middle of the year. What is that amendment is? First of all, GSTR 4 is applicable to composition taxpayers. Clear? Now, those composition taxpayers need not file returns on a monthly basis. It is sufficient if they file the returns on an annual basis. Earlier, the date to file the GST return was 30th April. Now they increased it to 30th of June. So the composition taxpayers annual return has to be filed by 30th of June, not by 30th of April. There is the date change. Please understand. Then comes your GSTR number 5. It is to be filed by non-resident taxpayers. They have to file within 7 days of the last day of the period of registration or 20 days of the month, whichever is earlier. Okay. Then GSTR 6. It is for input service distributor. They have to file by 13th. So I was telling you Hindustan Unilever Limited, they have to file by 13th. GSTR number 7, TDS, e-commerce, government people will deduct the TDS also, I told. Those people have to file the TDS returns by 10th of the following month. GSTR 8, e-commerce operator. So a person who is an e-commerce operator, they have to file the return by, again, 10th of, because they will collect a TCS. Then GSTR 9, yesterday also I was asking in the class, GSTR 9 is an annual return. So annual return, there was a statutory update in annual return. I was telling you yesterday 3 examples. Financial year 24, 25, 25, 26, 26, 27. I was telling you. 2 crores in any financial year you are exempted. Earlier it was 2 crores only in the preceding financial year. Now there is an amendment. 2 crore in the any financial year it will be exempt. That means you need not file the GSTR number 9. Then GSTR 10 talks about final return. When this final return will come, just now we discussed about cancellation. Once the cancellation has been done, one final return they will ask you to file. Please submit one final return. That's called GSTR number 10. Lastly, GSTR number 11 is for United Nations bodies. So UN bodies have to file the return by 28th of next month. So these are the return forms and the due dates. Okay. Now let's see what are there in each individual section. Section 37 is talking about furnishing of outward supplies. Come on. What all will you furnish in the sale return? Tell me. While furnishing GSTR number 1, what all you will submit? Obviously details of sale made by you. No. Sales made to everyone. In case of sales return, we have to give credit notes. Any amendments we are making also, we have to mention. So those points, see here. Every registered person, first who must file? Every registered taxpayer except the following. Who are they? Input service distributor. Why they need not file? Because for them separate form is there. GSTR number 6. Similarly, non-resident tax person. Why they need not file? Because separate form is there. GSTR number 5. Similarly, what I gave, composition taxpayers. GSTR number 4 is there. Then, persons who are deducting TDS under 51. GSTR 7 is there. Persons who are collecting TCS under 52. GSTR 8 is there. Lastly, OIDAR services. That is, your GSTR number 11 also is there. Since separate forms are there, for them GSTR 1 is not applicable. Then, what all it should include? See there, invoices issued, then debit notes, credit notes, revised invoice. I told no amendments and all. That revised invoices and all also should be there. Then, important timelines. What are the timelines? Filing window. Obviously, GSTR 1 should be filed by 10th of the following month. Then, blackout period. What is that blackout period? 11th to 15th you cannot file. Why, sir? Because what all you filed by 10th, the system will process during this period and they will make input available to the recipient. That is why during 11th to 15th you are not allowed to file. Then, late filing penalty. What is the late filing penalty? 100 rupees per day of default, subject to a maximum of 5,000 rupees. And lastly, I told no, the GSTR 1, if it is filed, immediately input will be available to the recipient in GSTR 2A and 2B. Yes, same way if he is a composition person, it will be available in 4A. 4B will not be there for composition person because composition person is not supposed to avail the input credit. So 4B and all will not be available. Then, errors. If there are any errors, can you rectify the errors? Answer is yes. You can rectify your returns happily within the time limit. There is no problem. But what is the time limit? In the small box I have written, which I already just now changed also. On or before the date of filing the annual return or 30th November of the subsequent financial year, whichever is earlier. I told no. One change I made immediately that there was a typo mistake in my slide. Do you remember? So same point. Categories, what are there in GSTR number 1? So see one by one. First, it will have B2B. B2B means business to business and intrastate supplies. Similarly, B2C, interstate supplies large. Large means big invoices. When you can call an invoice as a large, when the value is more than 2,50,000, you can call it as a large invoice. Then B2C, intrastate supplies also will be there. Then B2C, interstate supplies small. Small means when it is less than 2,50,000. That's what you have to keep in mind. Then, furnishing of inward supplies. This anyhow is an outdated concept, but I have given you only two forms. If you observe GSTR 2A and 2B. I was telling you just now also 2A is a dynamic form. 2B is a static form. What is the difference between dynamic and static? Dynamic means it keeps on changing. Static means only the, listen, only if the GSTR 1 is filed by 10th, that only will be reflecting in 2B. If it is filed after 10th, it will not reflect in 2B of this month, it will reflect in 2B of the next month. Are you clear? That's why it is static. Okay. Then comes your important concept, QRMP scheme. How many of you are aware of this QRMP scheme? Quarterly return, monthly payment scheme. What happens in QRMP scheme? Basically, a taxpayer whose turnover, I'll explain you overall. You might not understand directly. I'm just telling you overall. Listen carefully. A taxpayer whose turnover does not exceed 5 crore, he can opt for QRMP scheme. What do you mean by QRMP? Quarterly return, monthly payment. That does not mean he is a composition taxpayer. Please understand. I am talking of those whose turnover is more than 1.5 crore but less than 5 crore. So those people who are in regular scheme only I am talking. So those people need not file returns on a monthly basis. That's why the QRMP scheme has come into picture. Q means quarterly return. MP means monthly payment. So GST department is least bothered about your bloody return. It is bothered about the money. That is why it is asking you to pay monthly. But go and file quarterly. Are you clear? Now this scheme, listen carefully, this scheme is only optional. It is not mandatory. But if you opted for this scheme, what will happen? Listen. For the entire quarter, because it's quarterly return, no? Let's take a quarter of April, May, June. April and May, I have to file one form called IFF, Invoice Furnishing Facility. Third month, that is June, I have to file GSTR number 1. Now listen, April I have 10 invoices, May I have 10 invoices, June I have 10 invoices. Now April and May, 10 and 10 I already reported. In GSTR 1, how many invoices I have to report now? Balance 10 or all 30 invoices I have to report? Come on. In GSTR number 1, I have to report only the balance 10. If I report again the first 20, what will happen? It will increase my outward supplies and my liability also, which is wrong. That is why if I have 10 invoices in April and I filed IFF, again these 10 need not be reported in June. If I did not file in April, then I have to report it in June. Now you might ask, why this confusion, sir? They can directly say yes, file or don't file. That's all. Why to have this confusion? Simple, I'll tell you logic. If you want to give input credit to your suppliers on a monthly basis, recipients on a monthly basis, you file IFF. If you don't want to give any credit to them on a monthly basis, you want to give on a quarterly basis, don't file IFF, directly go and file GSTR number 1. That is the logic here. And in IFF, only B2B invoices will be recorded, not B2C. So in case I have B2C in April, B2C in May also, in June, I have to record B2C of April, B2C of May and B2C of June. But it is not the same with B2B. Why B2B I would have already recorded in IFF. Yes. Again when I come to June, I should not record them. It will unnecessarily increase my turnover. Everyone understood about this? This is the entire concept of QRMP scheme. But I have to pay monthly payment. Now how to arrive at a monthly payment? I have all the data. Yes, sales is there, purchase is there. Reduce the purchase and pay the balance amount. That is your entire concept of QRMP scheme. Q, quarterly return, monthly payment. They are asking for 4 marks. Please be careful. Understood about this? Then, yes, coming to composition, GSTR 4. What are the returns to be filed by composition taxpayer? Obviously, what is the return? He has to file GSTR 4. What is the due date he has to file, ma? He has to file by new due date. I told 30th of June, not 30th of April. Please be careful with that. Then, what all will be there in composition scheme? Is this anyhow they are not asking you? Don't worry. ISD, this I have already discussed. Within 5 days you have to do. Then QRMP and all I have already discussed. Yes, this is one amendment area. Before 44, I want to show 40 also. There is a difference between section 40 and 44. Section 40 is talking about annual return. Yes, 44 is talking about annual return and 40 is talking about first return. What do you mean by first return? Yeah, after registration, listen, I am supposed to get myself registered. I applied for registration within 30 days and my registration was granted later. Let us take one example. I applied for registration. Say today I am supposed to register, but I applied within 30 days. Say on 20th April I applied. My registration was given on 25th April. Now the supplies made between today and 25th have to be recorded in the returns. That return is called as first return. Are you clear? I can revise my invoices also only in the first return, not in any other return, because From today till 24th, I don't know my GST number. How will I charge GST? Are you clear about this? That is why on 24th, once I get my GST number, all the invoices issued from today till 24th, I will revise and file one return called first return. Okay. Then comes your 44, where there is an amendment. What is that amendment is? I was telling you, 2 crore limit. Those whose turnover exceeds 2 crore only, you have to file GSTR 9. But earlier, what was the condition? In one of the preceding previous years, if it exceeds 2 crore, you have to file for all the years continuously. But now they have changed that, I told you. The law is saying if in any of the financial years, if the turnover does not exceed 2 crore, then you are exempted from filing GSTR number 9. And this is applicable only from 2024-25 onwards, not before that. So in the question, in the exam, if they ask you also, you have to be little careful with this. Then, coming to final return, I was telling you just now, when you cancel your, registration, one final return you have to file, telling that, boss, I don't have any other liabilities. See, these are my liabilities, I have already paid. These are my inputs, I have already reversed. That's called final return. You have to file that return. Okay, that final return must be filed within 3 months from the date of receipt of the cancellation order. Okay, that's and what will happen if you default in filing the returns? Any return if you don't file, first they'll give you notice. Beta aake file karo. If you don't file, what will happen? Ultimately, they will cancel the registration. Suo moto. We told no, officer will suo moto cancel the registration. And before cancelling, what he will do? He'll issue a dash show cause notice. Then only he will cancel the registration. Understood about this? So with this, returns also in GST is over. Do you want to know about TDS and TCS in GST? Only one slide I will show you when TDS is applicable, when TCS is applicable. So that when it comes in the exam also, I don't want to leave that aspect. So let's see, just 5 minutes we will spend and close it off. Okay. Just remember what I say. Section 51 is talking about TDS. 52 is talking about TCS. Listen, TDS is required to be deducted by a government office. TCS is required to be collected by an e-commerce operator. Remember these two differences. TDS will be 1%. CGST 1%, SGST. TCS again 1%, which will be 0.5% CGST, 0.5% SGST. These points you remember, that is more than enough. A person who is deducting TDS has to file GSTR number 7 by 10th of the following month. A person who is collecting TCS has to file GSTR number 8 by 10th of the following month. Understood? Yes, that is all there in TDS provisions. That is the reason I told you, I'll just show you the provision. You see one problem on that, I have just given you, simple problem only, I'll show you. Tax deduction at source and tax collection. Yeah, legal provisions. Who has to deduct the TDS? See here. Central government departments, local authorities, notified persons, then state government, governmental agencies and public sector undertaking. When they have to deduct TDS, see there. The total value of taxable supply under a contract exceeds, how much ma? 2,50,000 excluding GST. Very important. Threshold limit is there to deduct TDS. Every payment will not attract TDS. Then what is the, one point I have mentioned, please see. TDS is not applicable in case of interstate supply. Note I have given. Interstate supply where the recipient and supplier are in the different states. Then rate of TDS I have mentioned. For intrastate it is 1% CGST, 1% SGST. Interstate it will be 2%. Correct? And then calculation basis also I gave. One example question also I gave ma. But before going to that example, you can see here itself. Taxable value is 1 lakh. GST is 18%. Total invoice value 1,18,000. Now they will deduct TDS on value excluding GST, not including. So on 1 lakh only they will deduct 2%. So 1 lakh into 2% means 2,000 rupees. So from 1,18,000 they will pay you only 1,16,000. That is what I have given you. Then payment and reporting. The TDS what you collected should be deposited by how many days? Within 10th of the next month, because you have to file even the GSTR number 7. Yes, by 10th. That's why 10th you have to file the TDS. See here, payment deduction should be done. Then payment should happen by 10th of the following month. Then return filing by GSTR 7 also by 10th of the following month. Then you have to issue the TDS certificate. Then practical example. One example I gave for TDS calculation. Please see. One more. We did one. One more. Contract value is 5 lakhs. Rate of GST 18%. GST amount is 90,000. TDS rate is 2%. Now 2% they'll deduct on which value? 5 lakhs into 2% will become how much? 10,000. So actually they have to pay 5,90,000. But now they will deduct 10,000 TDS and pay only 5,80,000. That is what I have given you. Understood? Then comes your TCS. Who must collect the TCS? I have given you. E-commerce operator is required to collect the TCS. When they have to collect? When they have to collect? When they do any service to their customers, they have to collect the TCS. There is no threshold limit as such. Now TCS rate for intrastate, again it is 1%, 0.5% CGST, 0.5% SGST. For interstate directly 1% IGST. Okay. On net value basis they have to collect. Again these all are same, my dear. They have to file GSTR number 8 by 10th of the following month and issue GSTR number 8A. Now one example I have given for TCS. Please see. Slightly different. Don't get carried away. 6 lakhs is the monthly sales. Returns are 1 lakh. So 6 lakhs minus 1 lakh, 5 lakhs. Now net value I have given. TCS is 1%. So they will add 1%, not deduct. 5 lakh into 1% is how much? 5,000 rupees. Correct or not? They will add this 5,000. Then see TCS amount I mentioned 5,000. Now net payment what they will give is only 4,95,000 because they are collecting the TCS of 5,000. So whatever amount this e-commerce operator have to pay to their customers, they'll take that 5,000 and they will give only 4,95,000. Now don't say sir they are deducting. No sir. My dear, this is not the revenue of e-commerce. This is the revenue of the buyer. From their revenue only they are collecting. No. So that's why it's called tax collection at source. Understood about this? So these are some provisions what I wanted to show you with regard to TDS and TCS. And yes, you asked me the PDFs. I'll send you the PDF through the sir. Sir will send it to you in the WhatsApp groups. Don't worry. Okay. So hope the class, marathon class was helpful for you. I don't know. Some of you might felt sleepy. But I can't help it because this is a theory subject. No one else also can help it. And I have also tried to keep it more lively by putting some slides and all. Otherwise, if I had told orally, everything would have gone as a bouncer for you. Okay. So while attempting also, we solved one question paper also. Main questions we have solved. While attempting also, please focus on all those points and attempt the question paper carefully. If you have any doubts, you can always get back to me. My phone number is 9886242246. You can note it down. If you have any doubts at any point in time, you can please get back to me. 9886242246 is my number. And my name is Srinath. Okay? 9886242246. Clear everyone? So anything, any doubt, any point in time before going to the exam, let it be IDT or DT, you can directly question me. You can directly ask me. I'll give you the clarity. Okay? Chalo. So hope this class was helpful for you. All the very best for your exams and God bless you. Thank you. Bye-bye everyone.